Okay, what's up everyone? How you doing? A new day, a new live stream, no? That's how we roll. So good to have you here. And we're gonna act on the promise of yesterday, which is comparing Ethereum with Bitcoin. That is what we're gonna do in this live stream. All right. Maybe I am a hobbit. What do you know? It's online. Everything is fake. AI. No. I'm actually a bot, an Elliott Wave Analysis bot. You could be 3 feet tall. Yeah, exactly. How do you know? You know, it's all perspective. It's all perspective. I gotta say though, let me cut down on the music here. Okay, brilliant. So I used to be a television host. For the people that don't know, just career in a nutshell: professional gamer, medical student to become a doctor, professional gamer at the same time, became a television host in the Netherlands, public speaker, entrepreneur, you know, that, and now we're here. And then eventually trader, now content creator and speaker. But for a time, I was a television host for 4 years in the Netherlands on ESPN, Fox Sports. And so my length is 175, but on TV in centimeters, so 1.75 meters. But on TV, I always looked a bit taller because of the setup of the table and stuff. And when fans and people met me in real life, then sometimes you hear like, "Oh, you're actually smaller than I expected you to be." Like, oh wait, you know, on TV you look so big, but then in real life you're only 175. You know what I mean? Yeah. It's all perspective. I am close to the webcam, of course, and the distance between myself and the door is longer. So, you know, I look like a hobbit in this room. Good to have you here, everyone. Good to have you here in this live stream. First of all, a little bit of chatting, and then we're going to start with the analysis, starting on Bitcoin. Then we move to Ethereum, and we're going to compare the two, right? So that is what we're going to do in this particular live stream. Especially the Ethereum chart is incredibly interesting and incredibly messy. So chances are that on Ethereum, I'm just gonna start counting with a clean sheet on the daily time frame, and then we'll take it from there, because some moves are very clear, some moves on ETH are not clear at all because of all the overlap that's existing on ETH compared to Bitcoin, where Bitcoin looks actually a lot more clean, a lot more clear. Now on Ethereum, we of course will do Elliott Wave Analysis. We will have a few scenarios, but I think what's even more important on Ethereum is to know about the invalidations, and that is going to be an important focus on ETH. Because even though you might not always know exactly what's going on with regards to the subdegree counts and what's happening lower time frame and whatnot, it's good to know the higher time frame invalidations of certain scenarios. And an invalidation is actually another word for an increasement in probabilities to the other scenario, right? So either bull or bear. So, and then after the analysis and comparing the two, we go into chat and Q&A, some questions. Now, I do like to ask you already in preparation of what is coming, that when I finish the analysis, and I am afraid that I have to do this from now on because there's too many people watching and there's too much chatting going on. Now, honestly, there's not too much chatting. There's never too much chatting. Please chat, you know, as much as you want. The thing is, in the past, after my analysis, I always scrolled up. I checked where we were here in the beginning of the stream, and then I went through everything one by one, and I checked if there were questions. And you know, sometimes it takes a lot of time, and then the people that are actually here and writing in the moment, I only see their messages like 30 minutes later. You know, that's not really how I want to move forward. So if during any moment in the analysis, and when I analyze, I focus on the analysis, so I'm not really reading chat, right? But if during any moment in the analysis you ask a question, please repost that message when I'm finished. And the moment I am finished, you will know, because I always put the timestamp of the start of the analysis in the chat, right? And then I put the chat window, poof, back into my screen, and you know, we can see. So please just repost the question or repost your message so that everything is happening over here. And yeah, then we can stay up to date with the live chat while interacting as well. And maybe one day the chat will go so fast that I just can't keep up, and you might have to post your question several times. But you know, I'm trying to do my best at least. But yo, Jeroen, Adam, good to have you here. Mohammed, Bettina, Miss Diagonal, as she is starting to be called. Yo, I tried to at least I asked everyone. I told Bettina, I said, yo, when are we gonna get a Bettina Trading YouTube channel? But she's not yet ready for it. But maybe one day soon. Bettina, if you do, I'll be your first sub. Maybe a Band-Aid. Good morning. Donovan, what's up? MT, JZ, Deon, JP, Markets, Mike. Nice to have you here, Mike. Mike, the psychologist, back again. Dasek, what's up? Carl, always a pleasure. Maybe two. I think their record is about 350 or 400 during incredibly volatile days where we had like 500, 600, 700 views. But that doesn't happen every day. Karim, welcome. Please don't let live stream cut out again. I've not been since you were in Holland. What I can do, T. Clepson, first of all, let me know if it happens again. Second, I can always plug in an internet cable. So the Wi-Fi router is in the living room, a while away. And here I have a Wi-Fi repeater, but it's not. I don't have the cable connected. I have a cable of 25 meters. I only need 2, 3 meters, 4 meters. But yeah, maybe it helps if I connect it to the repeater. But the repeater is literally underneath the desk. So, but yeah, if you do experience lags or other people, let me know. I just moved to another country. Settling in here, and if things are not 100% smooth, for most people it is, but let me know if it isn't. I'll try to look for solutions. So yo, good morning, guys. Help, new room, yeah, new living place, new country, new city. M58, how are you doing? Michael Medina, slept the like right in the rear. That's what we like to hear. Length may sound like how long. How tall you are, we call it height. Okay, height. Yeah, we call it lang. Hoe lang ben? Yeah, hoe hoog, hoe lang? Nee, hoe lang ben? Yeah. Can we check today's Sol? No, it will be ETH and Bitcoin. Solana has been analyzed in the recent altcoin stream. So if you go to my YouTube channel, please scroll down a little bit and you will see the most recent altcoin analysis stream, and Sol is literally first here in the list. Timestamps are in that video, so I recommend to check that one out. Hourly bearish div, yeah, we had some bearish CVDs playing out, but there's more bearish CVDs and an 886 touch at the low here at the moment. So probabilities are higher very, very locally to still take the very local low, but we'll get to that. Hit the like 3 times. Yo, what's up, Dusty Hunt? How you doing? Until you get back to the comments. Death Cross. I'm not like Death Cross, and I don't know what the other side is. Maybe that's the bullish cross, or I don't know how people call it. But it's not something I pay attention to. It is generally something that, of course, a lot of people pay attention to. So what I love to see is fake outs of those type of scenarios. Because it is so easy to learn about the death cross that so many people use it, and so many people might use it for their trading, that I love to see it being countered. So yeah, I generally don't really pay attention to these type of things unless I can counter trade it. Sam, what's up? Bettina, Pistachio offline, Dasa Gaming. Do you ever trade through TradingView? No, I always have a separate screen. I like to separate the two. Yeah. Patrick, what's up? Anselm, T. Clepson. Okay. Oh, well, we're doing good. John, what's up? Eduardo. Okay, let's start. Mark, Fozzie. Let's start. Yeah, I mean, John, it's what, like 10 p.m. now, 9 p.m.? Rostam, how you doing? Let us begin. I'll begin on the daily though, John, but we will be on the lower time frame very, very quickly. Very, very quickly. I'm going to remove this. 1 second. I need this one. I don't need that one. So I'm going to put these in here. And then we have the 1 hour. So we don't have a lot to talk about on Bitcoin. So we're going to start with Bitcoin, followed by Ethereum, and then compare the two. Okay, that's what's going to happen. And then we go into chatting and Q&A. 11:30. Shit, man. It's already so late. But with your, I mean, it's weekend. Are you home for the weekend or you're in your work city? Okay, 16 minutes in. Let's start. The bullish scenario on Bitcoin, right, remains the same. 3-wave corrective structure, ABC continuation to the upside. Now, because of this move to the upside here, preferably your wave C in the bullish scenario is already finished. Previously, we had an alternative scenario where we were looking for 1, 2, 3, 4, one more leg down in 5 as an opportunity. But as you know, over the past couple of days on the 15-minute and 1 hour time frame, probabilities were higher to look for either an ABC or a wave 1, 2, and 3 to the upside. So we were looking for price to move up, preferably actually with a little bit of a deeper retracement here, but we didn't get it. But nonetheless, the probabilities, they moved, price moved up, probabilities played out, can't complain. It's just a very shallow retracement on the 1 hour. But now that price has moved towards the upside and has hit the 0.618 over here, and you might think, why is this guy actually taking a Fibonacci from this order block, as it is actually on the daily, to the low? That is because if we are counting a 5-wave structure, 1, 2, 3, 4, 5, the 0.618 is an invalidation for a wave 4. Therefore, we want to count a finished structure at this low over here, like a finished impulse, right? Therefore your bullish scenario is C is in and you're moving towards the upside, preferably in 5 waves, right? 1, 2, 3, 4, and a 5-wave structure. Look for a rejection and then a continuation. Invalidation is, of course, very, very clear. The bearish scenario on the chart is a scenario where we were also still looking for price to move towards the upside, but then in a wave B. The reason we wanted upside is because of the target for C/Y. Let me explain. So what we're looking for here is a bigger 3-wave corrective structure, right? W being a flat, X complex, Y is a zigzag. And in Y, we then have a finished A, look for a 3-wave B and a 5-wave C, right? This is your bearish scenario, no? Of course, the invalidation of the bullish scenario is the low of A. But that is exactly what you want to see in the bearish scenario. You want to take the low of A. Now, your most common target for B here is between the 0.5886. Right? We have now hit the golden pocket, actually. So I could even change this to the golden pocket, do this, and do that. And preferably, we finish B on top or after the 0.382 Fib time, which is the vertical line taken from the start to the end of A. But as you can see, that also happened. Oops, I actually removed the wrong one. There we go. Right. So common target for a wave B, and then you want to see an impulse down in a wave C. Now, the reason we wanted price to move up yesterday is because of the target for your wave C. If price was where it was at the beginning of yesterday, somewhere around 57.7, 58, right? Then your most common target for C is below 38.5K, which is bear market stuff, right? So that's not what we want. Currently, the target for your wave C, 41.8. Decent. But as you can see, the 1 to the 1.236, your most common target still includes 38K. So that's not too great, right? So preferably, actually, you would still see some more upside, and the wave B is most commonly a zigzag structure, so there's the possibility of a W, X, Y moving up towards 65, 66, a double zigzag, and then you move down. That is at least something that I do keep in my mind. It also makes sure that wave B is a little bit longer if we do get it, and then you move down for your wave C. So this is your bearish scenario. We'll get to the probabilities after the analysis. All right, but this is what to look out for. The invalidation for this scenario is quite simply taking out this high here of your wave X. So then we go to the 1 hour time frame. Of course, in the most bullish scenario, you are looking for price to move up, right? If we have a finished wave 1 and a wave 2, we are looking for a wave 3 to the upside. And that means that we want to see price move to preferably at least the 1.618 trend-based fib extension from the low to the high of 1 to the low of 2, 67.5K, right? That's generally regarded a minimum target for a wave 3. However, what you can see now is this is your range of your wave 2, right? Very, very shallow. Didn't even hit the 0.382 Fibonacci taken from the low to the high of 1, which, by the way, is very rare that a wave 2 does not reach the 0.382. Something to keep in mind. But also we have started ranging here for quite a little period of time by now, right? So if we were looking for a bigger wave 3, we actually want to see short ranges up, 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 up. Now we are ranging here for quite a while. And a scenario that John this morning posted in Discord as well, which I agree with, is that you have the potential of course, a finished wave 3, even though preferably your wave 3 is going to extend, because most commonly your wave 3 is the extended wave. But the only rule in Elliott waves is wave 3 is not allowed to be the shortest wave between a wave 1, 3, and a 5. And it's not, because it is longer than wave 1, because we passed and hit the 1-to-1, right? Now, of course, in this case, you're then going to be looking for a wave 4 to the downside and then another wave 5. The target for your wave 4 in this case, right, so this is important, is between the 0.236 and the 0.5 Fibonacci, 68 to 58.6K fibs taken from the low to the high of your 3. Invalidation for a wave 4 is 57.6K. The moment you hit 57.6K, a wave 4 is invalidated, right? I don't know if you want me to talk already about what's going to happen then, but your bullish scenario will change. I won't put it on the chart, but your most bullish scenario will become a double 1-2 and then a bigger wave 3. Arguably even more bullish. It's just that a double 1-2 doesn't have too great probabilities when your second leg is a little bit longer than your first one. Something to keep in mind. But a double 1-2, if you do move that far, is going to be your bullish scenario. And your bearish scenario will be a WXY. I'll get to it, right? Let's first talk about the bearish scenario that we have now without price moving down to 57K. Bearish here, ABC, 3-wave structure, bum, 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 right? Most common target for your wave C is hit. Most common target for your wave C is at the moment respected. In confluence with the golden pocket from the high at 70 to the low that we have on the chart. We are building bearish CVD divergences consistently at the high, right? So this morning we had still quite a young range. It's nice to wait a couple of hours for the range to develop. And actually, quite interestingly, something that I missed this morning, but I didn't miss it at the beginning of the stream because it was on the chart, was that we had an 886 touch. Not this one over here. This is the one I had on my chart at the beginning of the stream. So the fact that we have hit this 886 over here increases the probabilities for price to take out this low, right? So that is something that we are looking for. The probabilities are high for price to take out this low. Reason being, if you look for an impulse of the low, 1, 2, and then 3, 4, 5, the 886 is a very rare target for 2, common for a wave B or X, increasing probabilities. Any move up is corrective in a wave C or Y, which in turn increases probabilities to take the lows. The only thing you have to remember, if you have no idea what I just said, is if you take an 886, right, from the low to the high in this case, and it is touched, probabilities are high to take out the low, right? It's very normal for price to bounce on the 886, but you're going to be looking for price to take the low as the highest probability, which then now is also here the highest probability, together with the consistent bearish CVD divergences that we have going on here. Lower high on price, higher high on the CVD. We had one earlier today, played out, but as price has been ranging here, right, for the past couple of hours, the bearish CVD divergences haven't actually stopped. You can even see here we have red candles forming, but CVD is moving up. Right, so that is again bearish is CVD divergences, which did we took the low? Yes, which has now played out. Okay, so with this ABC, we have some support to the downside, which is now your white box here between 58.8, 59.9. Right, we had a little range over here. A range is always important because a previous range acts as a structural support, right? If this one fails, you pretty much go down to the next range, and that then becomes a support resistance area, no? As well. However, with this ABC to the upside, and this is where paying attention, right? Pay attention. I'm gonna do one thing. Let me actually do this here. Chuck. Okay. So a minimum target for a wave B time-wise, right? If we look in the daily bearish scenario, is the 302. You want a wave B to finish at least after the 302, right? Now that is the case because we made a high after the 302, so we can check that box. Now if we open the 1-to-1, also a common target for wave B, B being the same length as A in time, we haven't yet hit it, right? Now the weekend is coming up, and the weekend is notorious for sideways ranging structures, not impulsive structures. So if we get any big moves, be it today, preferably not during the weekend. For this wave B, right, if price moves towards the downside and hits the 0.618, again, I will summarize everything in a bit, 57.7K, 6K, your extended bearish scenario will be a W, X, Y. Of course, most bearish is ABC, and you're going to move down impulsively, and we make another low, right? But if you want to extend wave B in time, due to the three-wave structure in this wave C, we have to think about a wave W here, right? And then we're going to have X, and then we're going to look for Y. Double zigzag is on the cards. Of course, also a sideways double combo, but you know, that depends. So if price hits that 0.618, it increases probabilities for bearish scenarios, as your only bullish scenario will then be a pretty much a double 1-2. Yeah. But that is not too great. So in other words, increases probabilities for the bear. So 57.6 is important. And after an ABC, if you do hit 57.6, bearish probabilities do increase. Of course, the most bearish is you just go straight down. Your alternative, which I think would be a little bit nicer, also because it is August, September, I heard in general are not too bullish or whatever, would be nice to continue the range in the W, then have an X, Y, double zigzag, fake out continuation to the upside. This is psychology, right? Fake out another move up to the all-time high, fake out, oh, this is the low, and now we go to all-time high. You fake out, people, in a WXY double zigzag, and then take it down. Now, if you do move up further, it also means that your target for your wave Y, which apparently I removed from my chart, is going to be higher as well. So we take a trend-based fib from the start to the end of A to, let's say, 66K. And now your one-to-one target is at 45.7K. And 45.7K, well, actually just below 45.7K, we have important support, 44.3 to 45.2K. So you can see how things come together, right? You can see how things come together, how scenarios are coming together as well. Currently, we have not hit the 0.618. Currently, we just have a retracement to the downside. We do have bearish CVD divergences. These have now all played out. The 886 touch probabilities locally have played out. Currently retesting this support over here, but we do at least know the level that we need to keep in mind, and that is 57.6K. Hit that level, and the probabilities decrease for the bulls and increase for the bears. And then the bearish scenario preferably becomes a bigger WXY structure. That would be ideal in my opinion. WXY move to 65, 66, right? So you want a corrective structure down, a corrective structure up, and then you drop another time. And what you're then going to get on the chart is low, high, lower low, lower high, lower low, lower high. What are people going to be thinking, right? And by the way, what it also does, if you would make, okay, now we connect all the dots. If you do make another low, so first of all, we haven't yet hit 57.6, okay? But this is how to think. If this happens, then this gets high probability, this gets this. On the weekly time frame, if we're looking for a 5-wave impulsive structure, most commonly wave 4 is longer than wave 2 in time. This low is made before the 1-to-1 fib time, meaning wave 4 is currently shorter than wave 2. Of course, if you do get a zigzag down in an A, B, C, you're going to make that new low after the 1-to-1, just saying. But at the moment, locally, we just simply have a retracement, and currently we are back into support. So it all sounds very dramatic, but the probabilities for the bears only really start to increase with what I mentioned this morning as well, is we need to see significant weakness, impulsive moves towards the downside, support has to be lost, 56.7K is an important level on the chart, right? That is where probabilities switch. So far, we have been making higher highs, higher lows, right? And we do have a retracement to the downside, currently retesting support. Observe the reaction, waiting very patiently. If there's no support, there's no interest. Yeah, it's simple as that. There's no FOMO, there's no YOLO, there's a plan, there's a strat, there's patience, there's control, and there is profit down the line. But at least we know what to look out for. In the morning, I also shared 2 channels in the previous update. This is the base channel, right? Taken from the low to the, wait a second. It is not connected. There we go. To that high. And as you can see at the moment, the price action is pretty much contained inside this channel. And that is something that you do like to see in a 3-wave ABC structure. Wait, that's why I'm on the log chart, mate. Nonetheless, though, pop, pop, pop. So you can see that pretty much the chart is contained inside the so-called base channel, right? Taken from the low to this high over here, the end of your wave 1 or your wave A, right? Now, what you want to see in a wave 3 is preferably price moving out of this base channel further than this blip that we have over here, right? Now, because of the size of this range, if we are looking for an impulse, we have to start thinking about counting this as a wave 4 and then a 5 up or a double 1-2 as mentioned, 1-2-1-2. But preferably actually you of course just get a bigger move out. So yeah, not a great fan of looking for this lower trend line in a bullish scenario. And this is the trend channel. Trend channel is taken from the high to the low. What we measure with this is a wave 4. That's what we do. The moment your trend line here is broken, probabilities increase, you are looking at a wave 4. But of course, preferably, your wave 3 is first extending before you actually break this trend line. So in other words, breaking this trend line is also not too great for very bullish scenarios, right? Unless, again, we talk about a double 1-2, but not too big of a fan of a double 1-2 at the moment, as this leg up is bigger than this one. Right? So we got to be a little bit patient. In other words, it just increases probabilities for the bears. So actually, compared to this morning, nothing actually changed. We know the levels to look for. We know the trend channel, lower trend line, right? We know the base channel, lower trend line. We keep an eye on the 0.618 that is pulled from the low to the high of 56.7K, or was it 57? What was it? That one. Now in 57.6K, there you go, right? Because so far, higher highs, higher lows. Yes, we have a little bit of a retracement. Yes, we do have some bearish CVDs, but these have now played out. So we are at support right now, right? Previous range. There is no reason yet to be very bearish, but if price starts to lose support, hits the base channel trend line, loses the trend channel trend line, hits 57.6K, the probabilities for the bears go up. And then you can still move into a WXY double zigzag. It's just that the probabilities for them go up, right? So that is that, right? So that's with regards to probabilities. So on the daily time frame, actually on the weekly time frame, the probabilities on the weekly remain higher for the bullish scenario on Bitcoin and the bull market to sustain itself, right? Which is this scenario here, where your invalidation is 37.7K, and this is your target area. Now look how big this target area is. You got more than enough space, more than enough space still. We don't want to move below 38.8K. And because we don't want to move below 38.8K on a daily time frame, all right, we have two scenarios which actually, interestingly, are both bullish, right? This is your most bullish, low is in and off you go. But even your bearish scenario is actually still bullish because it's a WXY three-wave corrective structure, and then you continue to trend to new all-time highs. But preferably, your wave B is going to go up still, just to make sure that your target for your white wave C in the bearish scenario, which at the moment sits at 41.8, which is quite low. If we move B up, if this high, if price can move up a little bit further and move to, let's say, 65, 66K, the one-to-one is at 65K, and 65 is a nice area of support. We got some stuff going on there, right? So in other words, preferably on the daily time frame, we're still looking for price to move up. And even if you do hit 57.6K, the preferred bearish scenario would actually be a double zigzag WXY to still move to this order block here, right? Sitting about 65K. That is interesting resistance, right? That is the main area of resistance to the upside, 64.6, 65.3. So in other words, the probabilities on the weekly time frame are higher for the bull market, higher for a wave 4, higher to look for a wave 5 to the upside. And it doesn't matter if we come back down once again on a weekly time frame or not, because it's the weekly time frame, right? So the probabilities remain higher for the bull market on Bitcoin. On the daily time frame, we preferably see price move up further towards 65, 66K, preferably actually, of course, not take the high at 70 unless, depends on the scenario we're looking for. Sorry for that one. So of course, if you're bullish and you do take out 70K, you take out this high, bull market is on, right? So continuation is on. So that is an important one, 70K. But what I mean to say is that in both of these scenarios, of course, in your most bullish scenario, where you look for an impulse up, and in your bearish scenario, where you look for a three-wave corrective structure to the upside, in both cases, you want to see price move up still, right? Instead of rejecting over here and now move down impulsively. That is something we don't really like to see, because then we get close to bear market stuff, because then your target for your wave C is going to be at like 38. And that's not what we want, right? So on the daily time frame, probabilities remain highest to still look for more upside, either a three-wave or an impulse. I really don't care. We got to wait and see what price is going to give us. But the probabilities remain higher to still look for some more upside, right? Now, on the 15-minute time frame, the probabilities, actually this morning already, I just didn't see the fact that this morning we hit an 886 at the low here. Well, so we didn't actually, I actually missed telling you about this one. But the 886 hit, increasing probabilities to move down, take the lows. Same over here. So we did speak about that one in the live stream. So the probabilities, therefore, after this touch were higher to move down and take the lows. We create a new range, touch the 886 again. Again, probabilities higher to take the lows. We fall down, and now here we are at the previous range, acting as support. We are currently in this white box as well, which can now act as a SR area, right? So, yeah, we haven't broken structure. We have bearish CVDs that already played out, right? We didn't break the base channel. We didn't break the trend channel. We didn't hit 57.6K. And because we haven't done all of these, it at the moment remains quite tricky to say, okay, that the bearish scenario has a higher probability. But of course, we know that if you do lose support, and if you do break the trend channel and the base channel and hit 57.6K, probabilities turn bearish, right? And that is important. No. An impulsive structure to the upside with a wave 3 over here is not ideal. Preferably a wave 3 actually extends. This is very short still, kind of as a wave 3, right? It's similar in size to wave 1. But your invalidation for wave 4 is 57.6K. So that's the level to keep in mind. Yeah, so preferably, of course, on the weekly, bull, daily, still looking for more upside, which also reflects on a 1 hour time frame, the probabilities to preferably still look for higher prices to come. And I don't care if that's an impulse in a 1, 2, 3, 4, 5, right? This is now an area of support, so we observe the reaction. We see if we can change the structure. What is important here, by the way, is to move above 61.2K. If you can move above these highs here, you invalidate the potential for a 1112 and a big impulse down. Some good information. And it increases probabilities again to move up. So actually the probabilities of this morning haven't changed. We're still looking preferably for price to move up. I don't care again if it's an impulse, 1, 2, 3, 4, 5, or a WXY structure, but 65K, 66K is still very much a target of interest. So that's Bitcoin for you. In other words, to answer the question of the thumbnail, because we are not clickbait bitches on this channel, we actually talk about what we write. The bull market for Bitcoin is very much alive. And now we go to Ethereum and compare the two. Ethereum is a very ugly chart. I am going to do some live analysis here on Ethereum. Right? And I do want to keep it simple. So as you can see, I do have folders. I don't want to use the folders, okay? Now, one thing that I do like to say is, and if you've been here on the channel, you know, but the 886 is touch taken from the high to the low, right? 886 here touched. And it is common for the 886 to hit it, move to the golden pocket, look for signs of strength, and then continue. Of course, we move below the golden pocket. In other words, the fact we hit the 886 does increase probabilities on ETH already to still, sooner or later, look for all-time highs on ETH. But it is common for an 886 touch to first move to the golden pocket. By the way, it happened twice on Bitcoin on the 50-minute time frame today. One time over here, one time over here, right? So that is nice to see. However, let's analyze this chart. For a current 886, you got to take it from the low. The only 886s that are interested or interesting in this downtrend is taking an 886 fib from the low to, you got to wait for a range again, but take an 886 from this low to wherever the new high is going to be, right? And an 886 taken from the current high on the chart to the current low. Those are the only two that are interesting, no? Cool. I happen to see the question. Okay, so we're going to start completely fresh on ETH, but I will keep my folders here. Let's start. I'm only interested, by the way, in this portion of the chart. I don't care about anything that happened before. I don't really. That's not something that I want to analyze. It takes too long as well. First things first. When you look at a chart, what I always like to do is select the high and select the low. It gives you a boundary, right? Gives you an area of focus, an area of analysis. Second, I simply look at the structure. Now, of course, the more you train Elliott waves, the easier things become. But I think we can pretty much agree that this is very much a three-wave structure and not an impulse. So in other words, the fact this is not a 1, 2, 3, 4, 5 wave structure decreases the probabilities for a wave A, B, and a big wave C to the downside, as in a zigzag. Increases the probabilities that you still have all-time highs to come, sooner or later at least. Now, let's observe, first of all, I'm first going to start with the bearish scenarios, zigzag, flat, WXY, triangle, because it's in the thumbnail, right? ETH bear market, question mark. Well, if ETH is or would be in a bear market, we need to be able to count one of these structures with confidence. Okay, so this is something I like to do, can recommend it to everyone. I mainly do it on stream. When I count off stream, I just do it in my head, but here we go. So if we're looking for a zigzag, all-time high on ETH, in a zigzag we need a 5-3-5 wave structure. This move to the downside, very much a 3-wave structure to the downside, not a 5-wave structure to the downside. Therefore, the probabilities for a zigzag are very low. That then leaves us with a flat WXY or a triangle. In a triangle, we are looking for a wave A, B, C, D, and a wave E. 4 out of the 5 waves of a triangle have to be simple zigzag structures, meaning a simple ABC up or ABC down. If one of the waves is not a simple zigzag structure, we preferably want to be that wave C, right? Preferably wave C is then a double or a triple zigzag structure. Double zigzag more common though. So if one of the waves is not a simple zigzag, preferably it is wave C. Alternatively, it is wave D most commonly, and on the third spot, which is not common at all, wave B, right? But preferably it's wave C or wave D. Also, we like volume to decrease during a triangle. Now, volume is definitely decreasing, but the problem for a triangle scenario is that if you're looking for a triangle, A, B, and still a C, D, E, it's way too early, way too early to start thinking about triangles. You need to wait for a wave D before you can really confidently talk about triangles, right? This would only be a wave B. It doesn't make any sense to talk about triangles. So therefore, we are going to remove this from the chart. Also, by the way, a triangle scenario wouldn't even really be a bear market, because the only thing you're going to be doing is you go sideways for a couple more months, if not years, and then eventually you move up. So you do create higher highs, but it's not relevant. It's not relevant. So that then leaves us with a flat and a sideways WXY. And a sideways WXY is a complex structure. I do not like to count a double zigzag, by the way. Let me explain why. So if we look for a double zigzag, which is a W, X, and another zigzag in Y, the moment wave X touches the 0.7 Fibonacci taken from the start to the end of W, the probabilities significantly decrease for a wave X and a zigzag in Y. In other words, significantly decrease for a double zigzag. Okay. And we hit the 0.7, we move past the 0.7. So a double zigzag, very low probabilities, not worth talking about. So again, leaves us with the flat and the WXY. Now in a flat scenario, we want price to retrace to a minimum of the 0.9 Fibonacci. You can see here on the log chart, I have the 0.9 on my chart. It's at 4.4K. We did not hit the 0.9 Fibonacci, and therefore a flat is irrelevant. Oh, it's going nice, no? And this then leaves us with the WXY. And we should maybe do, just in case a WXY doesn't work, right? So WXY, now a sideways WXY is also known as a sideways double combo. If you don't really know what I'm talking about, go to this playlist here, Elliott Wave's Beginner's Guide. Go to the end and then check more videos after this one. Wait, why can't I go and click right? Give me a second here. Playlist. Full playlist. And down we go. WXY, that's the one, right? These are complex structures. And we start with a zigzag, a three-wave structure. So that then is our W. Now it is important to know that if wave W is a zigzag in a sideways WXY, your wave Y is not allowed to be a zigzag as well. Which means your wave Y can only be a flat structure, A, B, C, or a triangle. More common would be a flat compared to a triangle in a wave Y. Right? So we then have our W, X, and our Y sideways corrective structure. Minimum target for your wave Y is taken from the start to the end of W to the end of your wave X. Toggle on the 0.618. That is your minimum target. The price is 1.4K. 1.4K. Actually interesting to have a look here. And it so happens to be very close to the point of control in the value area low of the previous range. Quite interesting. Okay, let's put this on the chart. Gone. And poof. So, wave X has to be a three-wave corrective structure, right? If wave X is finished here, we need to count a three-wave corrective structure in X. The only way we can have a finished corrective structure here in X would be to count a zigzag family structure. And that is because of how steep this move is towards the upside, right? Especially the ending, which then has to be counted as a zigzag A, B, C, a three-wave structure. Now with this then being counted as an A, B, C to the upside, the only count we can really have would then be a double zigzag, right? So we need to have an internal W, X, Y double zigzag. So we're going to put some stuff on the chart. If this then becomes the bearish, because we are working at the moment on finding a bearish scenario that could fit with the current price action, right? That's all we're actually doing at the moment, right? So we have cut away a zigzag, we've pretty much cut away a triangle because it's too early. A flat is not relevant because you need to hit the 0.9 Fibonacci for a flat structure, right? Which we didn't. And in a flat, your wave B, right, has to be a three-wave structure by itself, right? A three-wave structure up. But with this recent move to the downside, also that becomes tricky. So a flat, and then we have WXY. So we don't need a W, we need an X, and we need a Y. We're going to label this blue, we're going to label this green. And then we have a wave W here. And then inside W, we have our A, B, C, 1, 2, 3, 4, 5. Okay, there we go. Bearish. All right. So it's not saying we are bearish, but as an Elliott Wave analyst, you need to analyze both options. You need one count for the bulls, one count for the bears, and then decide on the probabilities. So for now, we are just analyzing the chart and we are finding bearish scenarios and then the bullish one. No? Okay, so in this case, we then have our wave W with an internal zigzag. Wave C took the high of A. That's what you like to see. By the looks of it, wave C is relatively short. So we're going to measure that in a second. This ABC does look better just by the eye. Wave X did not touch the 0.7, and that's what we want to see for a double zigzag. So that checks the books, right? And then we need a wave Y to the downside, but we'll see that in a second, right? Let's first do measurements. So we take from the low to the high to the low. Hopefully you guys enjoy live analysis as well. So here we have the 1-to-1 trend-based fib extension. Common target for a wave is C, not reached. Oh, that's interesting. Well, we did reach the minimum target, which is the 0.618, right? And the minimum target actually is the high of A. And we took the high of A, so we at least hit the minimum target for a wave C, breaking the high of A. Truncated C is incredibly rare. But we didn't hit the most common target. But nonetheless, if we think about a bearish scenario that finishes at the current high, right, this would be the way to go, no? This would be your high probability. Mainly because of your final structure, which looks very three-wavy to the upside, right? Let me double check what the low is here. Yeah, the low is the recent one where I put the X. So this is very much a three-wave structure. If we are looking for an impulse to the upside, what I actually wanted to see is 1, 2, 3, 4, 5, right? A five-wave structure to the upside. On the weekly time frame, it looks a bit three-wavy. So, okay, well, we can zoom in, right? Have a look. Can we actually see a wave 2 somewhere, right? If we are bullish and this is a wave 4, is there a wave 2 somewhere? Well, and we need 1, 2, 1, 2, 3, 4, 5, and then this needs to be your whole 4 and 5. In other words, this is 4, and this little blip is your 2. And that is very out of ratio analysis. 1, 2, 1, 2, 3, 4, 5. Besides, this wave 3 potentially is the shortest wave. It is shorter than wave 5. And if we take a fib from 1, 2, 1, 2, 3, from here to here to here. Yeah, wave 3 is the shortest wave. So we can't count a double 1, 2 here. We can't count 1, 2, 1, 2, 3, 4, 5, 4, 5. Doesn't work. Because then your wave 3 of 3 is the shortest. 1, 2, 3, 4, 5. Okay, if this is 1, then this is 2, right? This is 3, this is 4, this is 5. Okay, we get it. But then we get a problem. Because then this is your wave 1, this is your wave 2, and then you move up in the 3, right? But where is our 4 and 5? We never got a 4 and a 5. Where's our 4 and where's our 5? So the recent move up on ETH is not a great impulsive structure, right? We can agree that, okay, man, we can count some sort of a 5-wave structure in here. But where is our wave 4 here and our 5, right? This here, this move to the upside, very much an ABC structure. A three-wave, right? With an extended move to the upside. So alternatively, your bullish count would be to count this as 5, being a truncated 5. But let me be clear, a truncation in a bull market in wave 5 is not good, right? That's heavy bearish, a heavy bearish sign, right? A truncation in a bull market is not great, right? You do expect a very sharp retracement. Now let me have a short look here. So we are just analyzing the chart, and we continue to analyze. We look at everything on the chart, and then eventually we can get our opinion. Did we hit the 886 here? No. Okay. Now, if this would be an impulse, then we need a 1, a 2, and eventually a 3, 4, 5. Arguably, we have a double 1, 2, right? 1, 2, 1, 2, 1, 2, 3, 4, 5, 4. Where's the 5? There's not enough 4 5s going on. I might have to go to a lower time frame. So we continue to analyze the chart. And all of this matters, right? What I'm doing now with the higher time frame. So I'm on a 4-hour. But what I do here is important for the weekly time frame. Right? So, okay, we have our 1, we have our 2. Let's have a look here. We hit the... this is the low, I think, here. So, okay, we have our 1, we have our 2. Cool. We don't have a 1, 2, 3, 4, 5 wave structure leading diagonal. So probabilities would argue you have a 1, 2, 1, 2 here. Then a small little 1, 2, 3, 4, 5, 4, 5. Okay. 4, 5. Okay, that's good, right? So we have a wave 1, we have a wave 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. We have a wave 3, we have a wave 4, and we have a wave 5. The problem is, this is not your low. This is your low. So you need another 4, 5. 1, 2, 3. Where is my 4? Where is my 5? My wave 4 and my wave 5 are not here, right? The chart didn't print my 4 and my 5, right? This is too deep of a retracement. I mean, we took the lows. We never created another 4 and another 5. So counting 1, 2, 3, 4, 5 here doesn't really work. Looks better as an ABC, which is a 3-wave structure. So that means that we cannot count 1, 2, 3, 4, and a wave 5. Double checking this, by the way. Did we hit the 618 here? No, we actually just missed out. But nonetheless, it's not a nice 5-wave structure anyway. Okay. So we continue. With that information, we realize that preferably this structure here is a wave C. Sure, it's so... Guys, you have no idea, but I'm sweating. Like, it's so warm. You know, we have so many air cons in the apartment here. Big apartment, many air cons, but not in my damn office. I gotta get an aircon in here, or some fan. It's like live streams nowadays is like doing sports. I'm losing the same amount of water as a Formula 1 driver in a Grand Prix in Barcelona. So here we have our W, preferably finished X, and we look for a wave Y, right? So in our X, we then have our internal WXY, 3-wave structure ABC. Let's check the measurement of this ABC to the upside here. Common target for C, 1 to the 1.236 is touched. And if we take the higher here, yeah, it's also touched. So that's perfectly fine. So we can count a 3-wave structure to the upside here and an ABC, okay? Then we have our wave Y. Now we know, based on the analysis, that if wave W is a zigzag to the downside, wave Y is not allowed to be a zigzag structure. So in other words, wave Y needs to be that flat or the triangle, something I spoke about earlier. Now for a flat, you want to have at least a 0.9 retracement. Okay, so we take a Fibonacci from the high to the low. We toggle on the 0.9. Move it to the right, and we zoom in and have a look. Okay, interesting. Price hit the 0.9, 3.9K. Now that is something we can work with, right? So we put it on the chart, make it a different color. Only when I zoom out, I'm too zoomed in. Okay, so we make it white because that's the sub-degree. So wave Y, triangle or flat. Okay, we hit a 0.9. So let's have a look then. Okay, we need an A, B, and we need a wave C, right? Now, the thing in a flat is, however, that wave A has to be a 3-wave structure. It is not allowed to be a 5-wave structure. So even though we hit the 0.9, before we confirm a potential flat ABC, with C being a 5-wave structure, 1, 2, 3, 4, 5, we need this to be a 3-wave structure. So let's explore. And there we go again. Zooming back in. Zooming back into the daily time frame. Okay, now we can see that sometimes just pulling a trend line, right? I'm not talking about diagonals just yet, but sometimes just pulling simple trend lines can give you an idea. Okay, so we have the potential here of a diagonal to the downside. A diagonal would be a problem for a flat structure ABC, because in a diagonal structure, you count 5 waves, not 3. Meaning 1, 2, 3, 4, and a wave 5. So let's check the diagonal in a little bit more detail. While in the corner of my eye, I see a green bar, and that is maybe a band-aid once again. Yo, Tim, hoe gaat het, kerel? Yo, maybe a band-aid. Thanks, man. Keep the money, man. That's like 3 live streams in a row. I know it's like $3, but since you survived the hurricane in Florida, I guess you found some spare money, or money flew your way. I mean, thanks for the support, mate. Cheers, maybe a band-aid. And Solid Fab, make sure to fill in the form. And we are talking about the membership form. And if you fill it in, so you got gifted a bronze membership. But I will bump you up to silver. There we go. And silver is like short-term updates, and whenever I have ideas, I share it there, right? So, yeah. Okay. That being said, let's continue. Thanks, maybe Bendy. Wave A has to be a 3-wave structure in a flat. Question is, can we count a 3-wave structure? Well, for a 3-wave structure to increase in probabilities, we actually quite simply need to try and invalidate or lower the probabilities of bullish structures, which means impulse, diagonal, double, 1, 2, right? Or a multi 1, 2. So in an impulsive structure, so we want to invalidate these 3, right? Or make it low probabilities, and then the probabilities increase that this is some corrective structure. We don't have to even know what, doesn't matter, right? And that increases probabilities for a flat. Okay, interesting. So impulse, well, in an impulse, we want to see a 1, 2, 3, 4, 5, no overlap between 1 and the wave 4. There is a shitload of overlap over here, so an impulse does not work. Then we have a double 1, 2. I skipped the diagonal for a second. Double 1, 2, 1, 2, 1, 2. We want to see a very big wave 3 to the downside. We didn't get it. We moved up, invalidating a double 1, 2. Leaves the potential diagonal. In a diagonal structure, we then label it a wave 1, 2, 3, 4, 5, right? You want to see wave 3 moving below wave 1, 5 below wave 3. Preferably, wave 3 is shorter than wave 1. Not a rule, but a guideline. It is still very much preferred. Wave 5 has to be shorter than your wave 3. And preferably, we have a contracting diagonal. And a contracting diagonal is the highest probability diagonal. The moment we increase probabilities for an expanding diagonal, probabilities go down for this to be a 5-wave structure. So what we can do here is take a channel from this low, the low of 1, to the low of 3, to the high of wave 2, and we can clearly see that wave 4 did not make it to the upper trend line. So that is good, because if you have a contracting diagonal, you don't want to see this. By the way, let me shortly put this on the chart. Right? You want wave 4 to also be shorter than wave 2. Now what you can do is take a trend-based hit from the low to the high to the low, and wave 4 preferably is below the 1 to 1. Right? Actually, it has to be, else we talk about expanding diagonals. But as you can see, it is below the 1 to 1. So that is good as well. A leading diagonal can be a 5, 3, 5, 3, 5, meaning impulse, 5-wave structure, 3-wave zigzag, impulse, 5-wave structure, 3-wave zigzag, and a 5-wave structure. Or all of the waves can be three-wave structures, right? Zigzag family structures. At the moment, what we see here is a sharp move down, a three-wave up. A sharp move down, pretty much a three-wave up, right? And a sharp move down. So there's definitely potential here for a five-wave move towards the downside, right? So that makes the potential flat on a higher time frame a bit more tricky. So we cannot like confidently say, oh, we got a flat going on here, right? For wave Y. Because wave A has probabilities to be a diagonal. But what we could do is label this ABC, right? We're looking for a wave C to end eventually. And then on top, now beware because we don't have enough data yet. But then on top, label the low of a wave C and A. Create an ABC, all-time high, fake out, down bear market in your wave C, and then continue. Hey, right? So it looks ridiculous. It's absolutely valid, right, from an Elliott Wave point of view, but it's too early to call. You know, you got me there. So, but what we can't do in wave Y is count as a zigzag ABC and be finished with a wave Y, right? So in the bearish scenario, in other words, because this is the confluence between everything I'm saying here, this is the confluence. If wave Y would be a triangle where you can have a zigzag A, B, C, 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 up, you're going to create higher lows. In other words, you take the high first before taking out the low. And I say before taking out the low, but it's not like we go up and then take the low. It's just you take out the high first before maybe one day moving below, right? Instead of doing this, probabilities are higher to take out the highs. Yeah? Okay. Now with a flat structure, we have identified that we can't be sure this being a three-wave structure, right? There's definitely something going on here which suits a diagonal, which is a five-wave move. So preferably in a flat, we count this ABC, ABC, right? And then move down. It is most common in a flat to take out the high. So in other words, the probabilities are higher, also with a flat, to take out the highs first before looking for the low. I do have to quickly check wave C can of course be a five-wave structure. Imagine this is a 1, 2, 3, 4, 5. So I do want to quickly go to the lower time frame here. B W X. Your B finishes either here or it finishes here. That's a little bit of a question if you talk about a zigzag. But by all means, on the daily time frame in ETH, if you are looking for a zigzag down in a 535, you want at least an A, either B finish here or B finish here. It doesn't really matter because in both cases, you're going to be looking for another low first. Because if this is your A, which is then a diagonal structure, and you have a B, WXY works as well, whatever. But by all means, your recent high, you have a 1, 2, big move down in 3, 4, 5. So for ETH to increase probabilities to move up, we first need to hit 2.8K. We're currently at the 0.5, which is very much a wave 4 target. So, and we of course ended on a definitely high amount of volume here on Ethereum. But at the moment, this is a three-wave structure, not a five-wave structure, right? So of course we can count this, and then, but this is then your 1, 2, 1, 2, 3, 4, 5, 4, 5. That would be most bearish, but you at least preferably actually look for another low. If you do hit the 0.618, at 2.8K, you invalidate a 1, 2, 3, 4, 5, right? So then this is not going to be a wave 2 with this being a wave 4. And something we got to keep in mind here. So 2.8K is important, in other words, right? Is important. Okay, let's get back to the weekly. Even if we do, by the way, miss to move to the downside for one more low, let's have a look here. We have the value area high at 1.9. A point of control would be already quite low. Let me pull. I'm gonna quickly look for some areas of support here. So give me a second. So I like to use Elliott Waves in confluence with other tools. We have the 786 there as well. Probably an 05 from the low. Let me check here. Setup 05 from the low as well. So yeah, there's some stuff going on. Of course, we have the horizontal simple support resistance area here. All right, very important area on the chart. We've hit it once. Value area high is still inside this box. So if you do move down once, 1.9K is interesting. But let's get back to what I've been saying. So wave Y, flat or triangle. In a triangle structure, you look for A and then B and then C, D, E, up. In other words, take the highs first before maybe at one stage take out the lows. Or you have a flat. And the flat, of course, is A, B, C. Now, it is quite interesting, I completely almost forgot about this, that your minimum target for Y, generally being the 0.618, is at 1.4K, which is below this low. So great job, Koen. I should actually say, probably, that in a bearish scenario, take out this high before taking out that low, because your minimum target is 1.4. If we're starting to talk about triangles, you want preferably wave A to hit the 0.618 and then go for B, C, D, E, and then move up. And in a flat, it doesn't matter, A, B, and come back down later for C. It's just that the fact that this here can be counted as a 5-wave structure. One 1.6, 1.4. 1.6, 1.4. Let me check time here from the start to the end of W to the end of X. Okay, so commonly a wave Y ends between the 0.618 and the 1.618. We did make the low over here after the 0.618. If we go into a triangle, it's definitely going to be a very long structure. Moving far beyond the 1.618, which is no problem as long as it doesn't move all the way to the 5-6 fib time, which is that's 2027, so that's not really worth talking about. So preferably, and if you look for a flat ABC, it's also going to be probably a 1.618. So in the bearish scenario, with bearish being WXY, looking for a triangle, one more low in a wave C is perfectly fine. Locally, we would then be looking for 1, 2, 3, 4, 5. If you do hit 2 point... Damn, what was it? So this is important. Remember at the very beginning what I mentioned in validations. If you hit 2.8K, right? A local impulse here, 1, 2, 3, 4, 5, is invalidated, right? It's incredibly rare for a wave 4. It doesn't, like, so rare it doesn't even make sense anymore to talk about it for a wave 4 to hit a 0.618. So hit 2.832, and a wave 4 will have, is pretty much invalidated when you look at probability. So 1, 2, 3, 4, 5 would then be off the cards. And you preferably count this as a 3-wave structure to the downside. And if you hit 2.9, so that is the more safe option. If you hit 2.917, right, that is a more safe invalidation because it's a little bit higher. And if you hit this, probabilities increase that this here is a corrective structure and you don't have an impulse down here, right? And probabilities increase for bulls. Okay, so Yeah, it's still it's 2.1 all the way down to 1.5. That's still an incredibly big drop. I mean, Bitcoin would need to move to very low 40s for ETH to go all the way down to 1.5. You know what I mean? So at least we have analyzed a potential bear market scenario here. Having one more low over here is absolutely no problem. We have hit very important support resistance on the chart on Ethereum, right? Over here, we have support, resistance, right? Over here, support, lots like this level, lot like support, arguably, we traded through it quite a lot. And then we have resistance, right? So the level where we are now here is a very important level on Ethereum. It pretty much divides the upside, the upper half of the range, with the lower half. So of course, preferably, you're not going to lose this level. It's no problem to move at least. You have the value area high, so I do want to include 1.9K. Wouldn't be very pretty to close weekly candles below 1.9K, to be honest. And then in a WXY, we need Y being a flat or a triangle. So, make A, B, C, D, E, and then poof. Or a flat. Potential for a flat, but if this is a flat in an A, B, then you need a 1, 2, 3, 4, 5. So you would still be looking for one more low. So actually on ETH, as long as you don't hit 2.9K, the probabilities are very much still there to take out the wick low. Now, keeping in mind with what Bitcoin is doing, where we are, we're just ranging. Bitcoin would then probably also need to take the low, but Ethereum is very weak, very weak uptrend compared to Bitcoin. So okay, we got a bearish idea here. This is more one weekly bear WXY. And by the way, let me say something. Not that really anyone has a choice because no one can stop me from talking, but we did hit the 886 here locally. Generally something I talk about a lot in when I analyze ETH during the altcoin stream. On purpose left it out just to not use the 886. But the fact we did hit the 886 here, right, decreases probabilities that we are looking for 1, 2, 3, 4, 5 to the downside, meaning an impulse. It increases, and the reason is, let me say that first, that an 886 is a rare target for a wave 2. Common for a wave B or a wave X, increasing probabilities that this move down is a wave C or a wave Y, which in turn increases probabilities this is corrective, not impulsive, which in turn increases probabilities to still move up and take the all-time high, which is in confluence with the bigger 886 that we have taken from this high to the low, right? 886 from the high to the low. We retested the golden pocket, right? From the 886 back to the golden pocket. That's something you see so often, right? So it's good that we actually hit the golden pocket. We're now here around the golden pocket. We hit the 886 here as well. Same thing is true, right? So probabilities high on a high time frame to take out all-time highs. And even here locally, probabilities higher. This is corrective, not impulsive. Increases probabilities to take out the high. So to make it short, I could have analyzed ETH only doing these two pools, and I actually don't really need the rest to gauge the probabilities. The 886s will do the job, but of course it's a lot more interesting to actually do some solid Elliott Wave analysis. So okay, we got that triangle and WXY, which now means we go into the bullish scenario. All right, yeah, so that means impulse, diagonal, the multi 1, 2. There we go. We are not ready yet, because if the low is in, then we need to count one of these structures from the low to the upside. 1 second here, I just had a random thought. No, it's too high. WX. Just give me 1 second here. Give me 1 second here. I'm just checking something. Maybe some of you know what I'm doing here. If you know what I'm checking here, write in chat. What am I checking? What am I checking? Oh, we did go super deep though. No. Running flat is correct. Running flat is correct. But what is the running flat, Power Meet? What is the running flat part of? Why am I checking a running flat here, just in case? You're correct. You're correct. Absolutely correct. Why am I checking a running flat here? Yeah. Why do I want to double check it if we have a running flat in this particular part of the chart? What's the biggest scenario? What would be the biggest scenario here if this is a running flat? Two fib time, yeah, 2 fib time. But I am comparing my fib time, right? My fib time, let's see, this is a tip. I took the fib time from the high to the low to this high. Why? What am I comparing? What am I comparing? Why do I check it? You're on the good path though. Yes, P, that's correct. This is a running. I was checking a running flat. Yes, but what is the running flat part of? Yes, Samuel Lopez. Exactly. I'm checking a potential finished WXY with a running flat in a wave Y and W a zigzag. That is what I'm doing. So the moment I emptied my chart and I took out my previous analysis and I look at the chart once again, it hit me that I was like, wait, first I thought, can I count a finished triangle in here? And then I was low. No, because if this is A, B, C, I miss a D and an E, so I can't do this. So then but wait a minute, if this is a W and this is X and this is a running flat in a wave Y, I can have a finished W, X, Y structure and look for price to move up. The problem with, of course, a running flat is, first of all, it's very rare. Second, a wave Y here is very shallow, but I did at least want to check it, right? So your wave Y target would generally be the 0.618. We're far off. But the reason I check it is because can I start an impulse for a bull market from this low if we have potentially a finished high probability structure here? But I can't. A running flat is rare. Counting this as an impulse, it's very much like three wave. I was thinking about a 1-2-1-2, but this is a very long second 2 plus retrace to the 886, which is rare, right? So this being a 1-2-1-2 is not great probabilities. we didn't take this little low here, right? But yes, I was comparing. So both right, like all like Poemit, Samuel P, thinking in the same direction. The reason I did this on the chart is to check, can I end a bear market here? That was the goal. Just to double check, just to double check. But it's very difficult to end the correction there, right? Okay. Oops, that was my cap hitting the mic. Sorry for the earphone users. So, but yeah, again, that would mean that this needs to be a wave 1 and this a wave 2. I mean, look. In a WXY, with a running flat in a wave Y, not hitting the 0.618, it's not an invalidation. It's not invalidated. The scenario ending a bear market here in a W zigzag, X zigzag, Y flat, it's not invalidated, right? Running flat is generally regarded very rare. And of course, the target for Y is low, but it's not like an invalidated scenario. We do need to count a 5-wave structure to the downside here, though, which then has to be a diagonal structure. So you need 1, 2, 3, 4, 5. You need it. Okay, I am actually going to check this now. I'm interested. Wow, well, it's an ending diagonal, so all of the waves need to be 3-wave structures. So we can have a 3, 3, 3, right? We don't want to end 3, 3. One, 2. We did take the low, so I want a wave 3 to finish here. So that then needs to be a WXY, double zigzag in 3, simple zigzag in. Oh. Imagine we just did all the work only to then empty the chart and realize, wait a second. Did we take the low? Yes, we took the low. Volume. Channel, low of 1, low of 3, high of 2. Wave 4 didn't hit the channel. Wave 4 is smaller than a wave 2. 1, 2, 3, 4, 5. If this is a impulse up, 1, 2, 3, 4, 5, preferably this was your end, but you went down and took out the high again. So if you need an impulse here, you actually want to have 1, 2, 1, 2, 3, 4, 5, 4, 5, but we don't have a clear double 1, 2. We have one range here, which can be counted a 2, one range here for a 4, a 5, correction, another leg up. Makes you think. If there's a 3-wave structure in your 2, double zigzag in your 3, 4, 5. 5, it looks very messy here with the wick to the upside, but interesting. That was T. Clapson. I won't forget the name. I won't forget the name. If I ever have the honor of meeting T. Clapson, I'll remember. I'll remember. I'll make sure to give him a Hobbit present. Okay, so yeah. But if this is the end of a bear market, then we want an impulse up. We notice that a truncation is not really that great. Because we miss a 4-5. Wait. I'm gonna put it in my folders because it's just an interesting. It's just interesting. It's just something I want to track towards the future. Yeah. Of course, B is quite steep. Not gonna lie. 1, 2, 3, 4, 5. Can this be a 5 waver on the B here? Or is it not? In this scenario, preferably it is not. But we didn't hit the 0.618. Oh yeah, so there's potential for an impulse, but it's still interesting. I'm just gonna keep it in my folders. Next time, come to London. Oh, I should do an event in the Hobbit town. Talking about events, by the way, I get more and more questions about are you gonna host an offline event? People are interested in being with like-minded other traders, learning Elliott Waves all together. So a bigger offline event with all Elliott Wave people, and then do or present content about Elliott Waves, trading Elliott Waves, and trading plans and strategy and psychology. I get that question more and more. Of course, the channel is growing as well, so it's quite just a natural evolvement, I suppose, that I get that question in DMs or on Telegram or somewhere. I did write it down in the planning, like with Jeroen, to at least talk about it and think about it. It's not something I yet have planned, but who knows? I'm actually wondering, right? There's 200 people here. Of course, I mean, there's maybe a lot of new ones, but if an event would be hosted, right, and we do it in Europe, let's say I live in the south of France. I can do it in the Netherlands or in the south of France, right? Press 1 if you're interested. Maybe I have to do probably a more official voting to get an idea of the interest, because it's very difficult on a live stream. Let's start with the bullish scenario, and I'll keep an eye on what the chat says here. I probably have to do like a more official voting, get a better idea. And then based on the interest, I can always organize something and make a whole plan, and I can hire a venue and dinner, and I can do all all that stuff. Like I've been to so many events. That doesn't mean I can organize an event, so I probably need a party to help me out, but at least I know what I need at an event, because I'm a global keynote speaker and I always speak at events, so I kind of know the guest perspective but not the organizing perspective. Everyone must come with a Lambo. I like your thinking. Actually, there's quite a lot of ones. Quite a lot of ones here, actually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I mean, we can have a fun private event with 13 peeps. Probably some more rolling in later. Okay, let's start. Thanks for your vote there. I mean, it is something that's in the planning. I'm going to consider it for sure. It's fun. I also like to meet people. While I was moving to France, I met up with Pierre. He's a community member in Discord. His name is also Pierre. And he invited me because I didn't know he lives in Avignon, but I told people I'm going to pass Avignon. And he was like, yo, can we go for lunch together? I'm like, yeah, I'll bring my wife. And he brought his family, and we had like great conversations. He's an entrepreneur, 2 kids, boy and a girl, together running a company with his wife. Man, I loved that. And then in here, while I was in France, Caleb invited me. He's Don Carla in Discord. He invited me to go go-karting with him. I was here on Friday. I went go-karting on Sunday. Man, it was amazing. I love seeing people. I love seeing you guys. So I would be awesome to host something and make a very nice couple of days. Like have a full plan, but I would need to organize the whole thing. Yeah. Okay. Bullish scenarios. Elliott trades pattern up. 111. Sounds good. Sounds good. 13 is all right for your backyard. Yeah, I suppose. Oh, we can do it on the beach. Okay. Thanks, guys. Appreciate it. That's good to know. Can we have an A wave as a WXY itself and a B and then 5 wave C? Wave A has to be, yes, that's possible, Samuel, but only in a flat. So wave B has to retrace wave A, the internal WXY, by 90%. Bullish scenario, okay, rent a yacht. Yeah, we can. I actually have contacts in the yachting industry. I never actually rented a yacht yet. However, a family, or actually family of mine, she is a, 1 second, I need to ask how it counts. I need to ask what the name is, 1 second. Okay, so I say it's family because I'm married, and it's the sister of my wife. So she is I wanted to know the official name. She is a chief stew of one of the biggest yachts in the world. And she has an incredible... So the yacht that she is on, by the way, is always there during the Grand Prix of Formula One in Monaco. They dock a lot here in the south of France. And she's amazing. So she's a chief stew, which is one of the highest positions on a yacht. And she has great contacts. So yeah, I mean, how awesome would it be to rent a yacht and do an event on the yacht? You know, that would be an experience and a half. No, don't give me ideas. Well, it's going to be very interesting times. Okay, let's start. We gotta start. I'm distracted. So, what's Bitcoin doing? Still having bearish CVDs. Not much is happening. Bitcoin analysis started at like 15 minutes in, right? So make sure if you're interested in Bitcoin. Now we talk about the bullish count on Ethereum. So we have bearish ideas. We're now going to cover the bulls, which will take a lot shorter. And then we come up with the probabilities. Okay. Bullish scenario, you only need to think of 3 structures, an impulse diagonal or a multi 1, 2. In an impulsive structure, you're looking for a wave 1, 2, a wave 3, 4, and a wave 5. You don't want a wave 1 and a wave 4 to overlap. Right? That is an invalidation for an impulse. Now, if I put my wave 1 here, so this is live analysis, right? So I'm also pretty much talking to myself and convincing myself or this or that. But if I put my wave 1 here, my wave 2 over here, then this has to be counted as another 1, another 2. And that means we then need a 3, 4, 5, 4, 5, but that's a problem, right? Almost a problem. 1 second. Because if this is not the end of 4, but this, yeah, I mean, but then this has to be a wave 2, this has to be a wave 4, that is, of course, ridiculously short. So what I'm checking is, you need a 1, 2, 1, 2, 3, 4, 5, 4, 5, right, preferably. But look at the size of the correction here. Take a fib from the low to the high. We also touched the 0.618. So in other words, we cannot count this 1, 2, 3, 4, 5. Invalidated, right? Price hit the 0.618, doesn't work. So therefore, preferably, you have a finished 3 here, right? If we are talking about this particular bullish scenario. But that means that inside this wave 3, we need a 5-wave structure, which has to be a wave 1, 2, 3, 4, 5. But that leads, I do think, to a problem. Taken from the low to the high to the low, your wave 3 is definitely shorter than your wave 1. And your wave 3 is also shorter than your wave 5. So yes, we cannot count this 1, 2, 3, 4, 5. It's impossible, right? You cannot. So First of all, I don't know if people do this, but if you have a wave 1, 2, 3, 4, 5 here, wave 3 is the shortest. We cannot count a wave 3 being the shortest. That's an invalidation of an impulse, right? It's an official Elliott Wave rule. But we also cannot count 1, 2, 3, 4, 5 because wave 4 is so deep. So therefore, we then have to consider putting 2 here. Put that up there. Putting wave 2 here. So we then have a sideways wave 2, right? The running flat idea of earlier, right? So 3, 3, 5 wave structure. And then you have your wave 3. Now that again means that we do need to end a 5-wave structure at the high. Either over here or over here. Which again comes back to, can we count a 5-wave structure in here? Well, it looks very much like a 3-wave structure. Right? Up, sideways, up. If this was a nice impulse, then yeah, we can have a wave 3 with a truncation. But a truncation, especially on higher time frames, is incredibly rare. Right? Is incredibly rare. Oh wait, what am I doing? You can't have wave 3 here because we hit the 0.618. Oh, it's getting to my head. We hit the 0.618. So we, of course, we cannot have wave 2 ending there and then wave 3 here and then a wave 4 here. That's not possible. So, okay, cool. Well, we know that, which now means we immediately switch to a double 1, 2, pump, 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 which of course would be most bullish. For your information, a double 1, 2, however, is still a scenario in Bitcoin. The reason I don't show it is because it is so incredibly bullish. I like to be conservative. In both cases, you take the all-time high, but in a double 1, 2, you move to much, much higher prices. Okay, we do this. So for the sake of simplicity, wow, we're just gonna put, what am I doing? Couldn't focus blue. We're gonna put the 1 here or here. I'm just gonna leave it in the middle. What's important is knowing invalidations. So we do this, we do that. Spoke about it at the beginning. Double 1, 2. Yeah, either or. Let's. I got to do a few measurements. Okay, your second wave 1 around the same size as your first wave 1. It's longer in time and price, but that happens. And then you have your second wave 2, which so far is shorter in time than your first one. Okay, so first of all, just for your information, if there's anyone counting this 1, 2, 3, 4, 5, right? Doesn't work because wave 3 is the shortest, right? Invalidated. You can't count this as a 1, 2, 3, 4, 5. It's not according to official Elliott Wave rules. The reason I say this is because I happen to know one analyst that actually counts this as a 1, 2, 3, 4, 5. Invalidated. Not according to the rules, but I am not surprised. Then we have the double 1, 2 here. So we also cannot count it 1, 2, 3, 4, 5 because 4 is too deep. So that leaves us with the double 1, 2 here, right? 3-wavy structure, potential for a 5-wave truncation, right? Without going into the lower time frames. Doesn't matter. We know the invalidation being 1.5K, right? Making things simple. We hit important support. We hit the golden pocket. Double 1, 2 is of course very bullish because after a double 1, 2, you expect a big move towards the upside in a bigger wave 3. So this is going to be weekly bull. Probably the only bullish scenario we can think of on the chart here. Okay, so and a diagonal. So we actually switched from an impulse to a multi 1, 2 because we realized if we look for an impulse, 1, 2, 3, 4, 5 doesn't work. Wave 3 is the shortest, not allowed, right? Repeat. If we count 1, 2, 3, 4, 5, wave 4 hits the 0.618, invalidation for wave 4. right? So an impulse actually doesn't work, which then leaves us with a diagonal or multi-1-2. Well, the multi-1-2 is on the chart, easy invalidation, 1.5k. If you, however, hit 1.7k, the probabilities for this scenario will significantly go down. So you don't want to hit 1.7k. What does help this particular scenario is that the 886 is touched. Let me put this in the folder. And the 886, right, is a common target for a wave B or X, which increases probabilities this move to the downside is corrective, not impulsive, in a wave C or a wave Y, right? Interesting in this particular scenario. We also know that based on a local Fibonacci pool, the 2.9k level is important. If you hit 2.9k, a 1, 2, 3, 4, 5 impulse down is invalidated. Increases bullish probabilities. So 2.9k is important on the chart. Let me put this 2917. Okay. Are we gonna make this red? Yes. Okay. Bull. Okay. So very nice. Impulse. We don't want to look at impulses. Diagonal. Well, in a diagonal structure, we are looking for, right, 1, 2, 3, 4, 5 retracement continuation, right? Preferably your wave 3 is shorter than 1. 5 has to be shorter than wave 3. And a contracting diagonal is most common compared to a expanding diagonal. So we're always looking for contracting diagonals, and if expanding, preferably look for something else. But if we are looking for a diagonal, the only way here we can look for a diagonal off the low would be 1, 2, 3, 4, 5. But look at your 5, right? Look at what happened with your 5. Your 5 is very long, right? And it is longer than your wave 3. But your wave 3 is shorter than your wave 1. Let me show you what I mean. Take a trend-based fib from the low to the high of 1 to the, which one is lower here? 7.4, 7.1 to the low here, right? There you go. So if you count 1, 2, 3, 4, 5, 3 is shorter than 1. Well, that's what we like to see, of course, in a contracting diagonal, right? But then we actually want to see a wave 5 being shorter than wave 3. I mean, we can all see what happened, but take a trend-based fib from the low to that high to the low, and this is your invalidation for a contracting diagonal, which clearly we have hit. So yeah, a diagonal is not great probabilities. 1, 2, 3, 4, 5, invalidated. The only thing one could do is finish a 1, 2, 3, 4, 5 here in this range. But then after a diagonal, most commonly you expect a deep retracement to the downside, not this little blip over here. And if this whole diagonal is a wave 1, you want to see a bigger wave 2. We didn't see a bigger wave 2. We also cannot count a flat here, A, B, C, right? Because your wave B is too extended. Take a fib from the high to the low of this move, toggle on your expanding flat fibs, past the 1.618, very rare for a wave B. So you know, it's not great. So in other words, the only bullish scenario on the chart, it happens to be your most bullish scenario, is a 112. Ta-da! And your invalidation is 1.5k. And if you hit, actually, wait, I actually want to, can I write? Oh, this is, they have some new stuff going on, right? Stats. I don't want stats. Well, okay. Very nice. So this is your bullish scenario. You hit the 886. Increasing probabilities to move down is corrective, not impulsive, which increases probabilities to still take out 4.1k and also take out 4.8k. And in a 112, this would be what you're looking for. Your most common target for your wave 2 is the 05786. We are just outside the 05 at the moment. And what I want to check, which is something I rarely ever do, period, is I'm actually going to upload, I'm going to check the Ethereum CVD. So give me 1 second here. I'm just going to upload Ethereum. I'm going to upload my template for ETH. 1 second. It's an old template, but I just want to check. Holy shit. It's always difficult to really get an idea of a high time frame CVD, because as I always say, the lower time frame CVDs are the most important CVDs. Yeah, I mean, yeah, you have a higher low in price and a much lower low on the CVD. But what I want to see on ETH with regards to the CVD is I want to see local bullish CVDs. We did have a bullish CVD here, higher low in price, lower low on the CVD. That one played out. We took the high, so that's nice. But what I want to see is continue, right? Higher highs, higher lows, higher highs, higher lows, hit 2.917, continue to create bullish CVDs, and then we're talking, right? Then we're getting somewhere. So, but yeah, you do have, of course, very big bullish CVDs going on here, higher low in price, lower low on the CVD. But what I want to see is locally on the 15, 30 minute, right? 15 is my favorite. Price doing pop, 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 right? Bullish, 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 bullish. Yeah, that's interesting. That's interesting. More local CVDs are always more important than the higher time frame. So here on the 1 hour, higher low, lower low. Okay, interesting. 15-minute time frame. What's happening here? Oh, we took the low. So there's currently there's no bullish CVDs. No, there's no bullish CVDs going on at the moment. Price is just retracing. CVD is retracing at the same time. So they go in sync. We did hit the bull CVD here. Higher low, lower low. For diamonds, this was a setup if it retraced, right? I don't know how far it retraced, but likely it was a good one. I don't really trade ETH myself. So, okay. Now the common target still goes down to the 786, which is 1.8k. Now with this information, finally, let's check out some confluences. I do have my confluence folder here, but I'm actually gonna clean this up. Ups and gone it is. And we're gonna look for a few new levels. So ooh, it's warm, man. Oi! Hey, Hoshi! Yo! Comment ça va? What you up to? Yo, Hoshi, first of all, welcome again for the renewal. you now have the silver badge. And second, really appreciate supporting the community with the gifts, man. That's awesome, Hoshi. Appreciate it, man. Really cool. Patrick, Ganam Al Otibi, Hamad Afra, Martijn, and Maarten Eickholt. Make sure to send me a message, answer the form here, and I will make sure to get you to the silver membership package, because bronze is the gift, but I'll make sure you are going to be silver. So make sure to answer the questions in the form, and I'll make sure to get you sorted. So that being said, gonna have a quick look for some support and resistance areas on the chart, because these are quite interesting in confluence with Elliott waves. I mean, this monthly is honestly not interesting because it's close to all-time highs, but we're going to put it on the chart anyway. We're just going to put everything on in this range here. Oh, this one is likely touched. Not interesting. So we're going to start with the horizontals. We have the weekly here got touched. All right, these got touched here. Weekly. This one got touched. I don't really want to go lower. Okay, so those are the you love to see it. Nice rejection, you know. Okay, there we go. Okay, and now we have the volume profile. So as we're moving down, I want to see what happens for support. So I'm going to pull a few volume profiles. Might make the chart a little messy. That's the way it is. Ooh, we are now retesting the value area high. Important resistance where we are right now. And then we have, of course, great support down. Quite a gap between the two, like $200. If you go to 1.6, of course, probabilities are high. You're going to take out the weekly at 1.5. Do I really want to put a target box here? Yes, I'm going to have two on the chart. So first of all, I will have a target box here. Second, here. Okay. Okay. Wow, that's a long period of analyzing. Let's get to the probabilities, no? And comparing the two charts. Let's start with Bitcoin. We're not going to do an analysis. We only shortly summarize probabilities on both Bitcoin and ETH. Mainly on, like, what's most important on, like, for ETH is the invalidations. You got to know your invalidations because those are tradable. I can feel my energy draining as well. So on Bitcoin, oh wait, I don't have my Bitcoin template, of course. Now, 1 second. There we go. I just want to know what we're doing. So on Bitcoin, as far as it stands, I guess that is English. At the moment, the remaining highest probability scenario is a 5-wave impulsive structure, 1, 2, 3, 4, 5, right? This is pretty much your final area of support for Bitcoin, right? If you lose or move below 42K, it starts to become very poor. And the official invalidation is 37.7, but moving below 42, that's not going to be very pretty, really. So it's very deep, right? 42 is still the 05. But at the moment, as long as it stands, highest probability is a 5-wave impulsive structure, 1, 2, 3, 4, 5. Now, if the low is in over here, we know that locally we want to look for 5-wave impulsive structures on a 1-hour time frame. And therefore, we don't want price to hit 57.6K. If price moves down to 57.6, probabilities decrease because a 1, 2, 3, 4, 5 is invalidated. If price moves to the lower end of the base channel is also not too awesome, but a potential double 1, 2. Breaking the trend channel to the downside is a bit too early. If you do move that low, or you hit the lower end of the base channel or the trend channel, your only bullish scenarios remaining is a double 1, 2, really. 1, 2, 1, 2. Instead of counting 3, 4, 5, right? So then a double 1, 2, 1, 2 is, of course, very bullish. We do move into the weekend. Weekend is generally known for sideways ranges, right? and not impulsive structures. What is interesting no, we'll just let price do its thing. It's still very much ranging. So on the 1 hour, at the moment, price did not lose any support. Price is holding market structure. Price is just ranging on top of support, actually. We didn't move out of the base channel. We didn't break the trend channel. We didn't hit 57.6K. So at the moment, the probabilities, it's difficult to say, the probabilities at what price is doing right now would be much higher for the bears. So we are just retesting support and continue to observe the range. Arguably, probabilities are still higher to take out this high at least one more time. And also in the bearish scenario, that's actually also what we want to see, because even in a bearish scenario, if this is a finished ABC and we do get a deeper retracement, I want to actually count this a WXY preferably to move higher. 65, 66K, that is very nice resistance at 65, 66. So if we do reject, from an Elliott Wave point of view, it would be best to reject there. For now, we are retesting local resistance into support. What I want to see for the probabilities here to become more bullish locally on the 15-minute is price to grind up, change the local market structure, continuous bullish CVDs, starts to get interesting, right? Because then we have a potential support resistance flip and we can look to 65K. So currently for Bitcoin, weekly time frame, high time frame, the bull market is still very much the highest probability scenario, right? Yeah, you made a low at about 49k. It doesn't matter. Honestly, that's actually what you like to see as well, because in a bull market you like to retest a wave 4 of a lower degree, and in this case you then count it 1 2 1 2 3 4 5 4 5. Wave 4 of a lower degree has been hit on my chart, not on the index chart, which is interesting. So that's interesting. So even if price makes another low, there's enough room, but it very much depends on the local move to the upside. Is it bullish? Is it bearish? Right, we made a high. We are now starting a range. Once the range gets a little bit more body, we can really start to analyze the structure. The weekend is coming up as well, and we know how probabilities change in favor of bears. So, okay. Yeah, some weekends have been chaotic, but in the end, probabilities are always towards the weekends being sideways. Even if in a weekend you do this, and then you do this and this, you tend to still move into a range. And that's just probabilities. If you check the price action at every weekend, you will see that its most common price goes sideways. Sideways does not move. It can't break out shortly, but it tends to come back again and just continue the trend instead of moving into wave 3s or impulsive structures. And then we have Ethereum, right? Currently at some support, and of course we have the horizontal support resistance area here on the chart, which is important. On ETH, we have one favorite, like when we talk about bull and bearish scenarios, we have 3 bearish, but 1 higher probability bearish, and we only have 1 bullish scenario. So just to shortly show you and then summarize probabilities. Your first bearish scenario is a sideways WXY, where generally the minimum target for Y is the 0.618 at 1.4k. Because wave W is a zigzag, wave Y has to be a flat ABC or a triangle. Right? In a triangle, preferably, of course, your wave A would then hit the 0.618 and B, C, D, E, and then eventually you move up. In a flat, you would look for A, B, C, right? Or local ABC that moves deep enough. But this here looks like a diagonal, as we identified during the analysis. So preferably, you're then looking for a bigger A, B, and then a C down, right? Alternatively, you have a big triangle, which means you're going to create higher lows and move up. Not sure how this compares to Bitcoin, because look, the bearish scenario here can relate to Bitcoin. This scenario is very long, very, very, very long sideways price action, which if we look at Bitcoin at the moment, if Bitcoin higher probability is a bull market, and here you have A, B, C, D, E, then with the final push up for Bitcoin to create a wave 5, you would need to see wave 5 being wave D. Bitcoin moves down, starts to correct, and then a C, and then an E. There's not great confluence between Bitcoin and Ethereum if this is a triangle. Nah. It's not. I just have it on my chart, but it's not a. It's too early to also talk about triangles. Wave D is not even in, so yeah, it's not cool. And then I had a funny little thought, which is a WXY zigzag X running flat, Y finished 1-2 continuation. But this is actually the same scenario as the most bullish scenario, which is a 1-1-2. So actually, I should call this bull. Where you have a bear market finished 1-2 continuation, and the bullish scenario is a 1-2-1-2 continuation. Your invalidation in both cases is 1.5k. Now let's talk about the invalidations, because these are important and these are tradable, because that is what the probabilities, that's where probabilities are decided. Wait, I pressed the button. Go. Okay, we're back. I pressed arrow down. So on Ethereum, first of all, of course, this low here invalidates a bull market, and therefore you're going to be thinking, of course, about the bear market. You are very late, of course. You can't write like short the invalidation here because you're literally at the target for a wave Y. However, you also don't definitely need to short there because, of course, by the time price is here, you should have already taken like many short positions anyway with your local Elliott Wave counts or local plan, right? Whatever that is. It might not be Elliott Waves, can be other tools, right? So even though probabilities might not necessarily be higher for X or Y, you can still trade into that direction, right? As long as you have good risk management and a solid plan. But of course, this invalidation is not really trade worthy. It's very low, close to the target of a Y. At the moment, we're not close. We're 1K above the invalidation. If price, however, makes this low and moves up to 2.9K, 917 to be precise, it invalidates a wave 1, 2, 3, 4, 5 because it invalidates wave 4. And actually, arguably a little lower, 2.8, but I want to be extra safe, 2.9. I prefer doing that. So the moment price touches 2.8, but I have 2.917 for the 618 reason on my chart, a wave 4 becomes invalidated, and that increases the probabilities of a three-wave structure down. Corrective. Now we also have an 886 touch here, and the 886 increases probabilities that this is corrective anyway, in a wave C or a wave Y. Right? So that is noteworthy. Increasing probabilities to still sooner or later take out the double top here. In your bearish scenario, of course, you want to see preferably either continuation down in Y or this. Now let's talk about similarities. If we're looking for a WXY bearish scenario, in a triangle, you're going to make higher lows and move up. In other words, you take out this high, likely, you know, looking if this is 1, 2, 3, 4, yeah, you need quite a deep 5, but this is where the struggle is. The 0.618 is below this low, but if you look at the current structure, if this is 1, 2, 3, you need a 4 and a 5. Your wave 5 has to be quite long, and your wave 5 needs to be longer than your wave 3. I'm pressing all sorts of buttons. So, and that is, of course, lower probability. Yeah, the 1-to-1 is above the 0.618. So in other words, you would then need an extended 5, but an extended 5 is rare. A, B, 1, 2, 3, 4, 5 in a wave C to then create wave A of a bigger triangle, which is way too early to count anyway. So it's not too great probabilities, wave 5 being the longest. Yeah, so preferably you take out the high before taking out the low, maybe at some stage. In a bigger, this is not really relevant. And then in the bullish scenarios, you also, of course, want to take out the high first, because the low is the invalidation. And if wave Y turns into a flat, then preferably A, B, take out the high, C, and then move down for the low. But then you still take the high. So on ETH, the probabilities would be higher for price to take out these highs before taking out the low, at least for now. But more confidence comes if you can actually hit 2.917. 2.917, hit that, and the probabilities increase for the bulls with a three-wave corrective structure down and looking for price to take out the high. What is difficult for the bullish scenario is counting this as an impulse. It's very much a three-wave structure. The only way really to count it maybe as an impulse is a truncation in a 5 and then have a three-wave structure. But as we analyzed, a truncated 5 here is not too nice. So we have to do like this, you know, like look through our eyes a little bit to make the bullish scenario work nicely because of the three-wave nature of this move up, which is not great for the bulls. That's the problem for the bullish scenario. So the invalidations play an important role here. 2.917 probability switch bullish, right? That is most important. The 2.917, and of course it's nothing goes in a straight line. But if you can hit 2.917 before taking out the low, you increase probabilities for a three-wave structure here, which increases probabilities to, maybe we continue the range, but at least to take the highs before lows. And with Bitcoin still having the highest probabilities of a bull market, as long as it stays preferably above 42, but the official invalidation is 37.7, still a big drop. And on Bitcoin, on the daily time frame, the bullish scenarios have a higher probability, both an ABC or WXY, also because we touched 886s. In confluence with Ethereum, having a scenario, having the probabilities higher to take out the high at 41, 4.1K, matches Bitcoin. But I do want 2.917 to be hit. So yeah. So just a few interesting details. What lowers the probabilities for WXY is that your C is shorter than your A. Yes, because C didn't hit the common target for a wave C, but it did hit the minimum target, which is taking the high of A. So that is, of course, something. Wave Y target has been reached. ABC target is fine. So a wave Y target has been respected. And then wave Y can only be a flat or a triangle. So that's the thing. It's in both cases, you're going to continue ranging either in a flat or you're going to be looking for a triangle. I mean, it's, yeah, you've already dropped so much in both cases. You go sideways pretty much. And in the bullish scenario, of course, you made a low. No. If you hit 2.917, that's the important level. I can't make it easier. 2.917, hit 2.917, you invalidate a wave 4. Probabilities higher, corrective, touch the 886, touch the higher degree 886 from the high to the low over here as well. What to say? So probabilities on ETH unrelated to scenarios remain higher for all-time highs. You touch the 886 over here, taken from the high to the low. Touch an 886 here, taken from this high to the low. Probabilities increase. Any move after is corrective, not impulsive. Increasing probabilities to still look out for, first of all, these highs and then this high. That's Elliott Wave theory. The 886, right, is very, very important. And you can analyze this chart in 1 minute, pull 2 886s and you're done. But if you want to look in more detail, that would be a WXY or a 112, with the alternative being a single, where is it? My single 1-2. Oh, I think I accidentally clicked on removing it. 1 second, Ctrl Z. Hopefully I can get it back because I don't want to put it on the chart again. Yo, where's my there we go. I accidentally removed it. So this one here. Instead of clicking the I clicked the bin. But yeah, in both, of course, a 1-2, you take out the high. So yeah, I mean, probabilities on ETH still higher to continue and take out those highs. And that's that. Hit 2.917, probabilities really increase for price to take out the highs. And that's just an important level. Both the bearish and the bullish scenario have something that's not ideal. ABC, C shorter than A. In the bullish scenario, counting this as a wave 1 or as a double 1-2, right? But by all means, counting this as an impulse is not pretty. It's very much a 3-wave structure. So the nature of the move up here would increase probabilities for a bearish scenario, right? While at the same time, an 886 increases probabilities to take the highs. Wave C being shorter than your wave A here does increase probabilities that this is a different structure compared to this being a wave C. So that goes against the bears. So 2917 is important. That's that. And with regards to Bitcoin, there's still the potential for a double 1-2. Currently we look for a 4, but I do have a double 1-2 in my folders. An ETH double 1-2 would of course match that. It's just a very tricky impulse up here, this one. Unless wave 1 is truncated, but preferably it's not. Because that's very rare. So, yeah, I know I haven't sit for an hour because my water ran out. So, yeah, that is ETH versus Bitcoin. Bitcoin, highest probability for the bulls, as long as you don't take 37.7 theoretically, but moving below 42 would start to be a problem. And the lower time frames at the moment, the 1 hour, I spoke about it enough times now with what we are looking for and how probabilities change. And comparing this to Ethereum, right? Ethereum definitely has a rough start of the low. A very 3-wavy structure here to the upside, but we got to take it as it is. And if this is impulsive, we want to count this as a 1-2. There's no other way really. Where your invalidation is clear, 1520. And in a bearish scenario, right? You are preferably looking for at least one more low for a bigger C. A, B, 1, 2, 3, 4, 5 in a wave C. If you hit 2917, the probabilities increase to take out the highs. And that's that. That's that. There we go. Finished. Whew. Okay. Elliott Wave Analysis at... When did we start? 16 minutes or something? So, very nice. Keep hydrated. Yeah, I mean, the stream has been going on for 2.5 hours, so it's not like I will continue for a long time here. As mentioned at the beginning, it would be best to, if you had a question earlier, to repeat it. Because I don't want to scroll all the way up and fall behind on live chat. The third wave in a multi 1-2. It's just it's relatively easy. If you have multi 1-2, 1-2, you measure your 3. In that case, you want to see, of course, a 3, 4, 5, 4, 5. So first of all, put the count on your chart. Second, do this, and then you can take a blue 1.618, which would generally be a minimum target for your 3, and you can then of course also the white count, preferably your wave 3 of 3, right? So there you go. So you just do both, right? Your 1-2 and then your 3, preferably in white, is also your extended wave. And then your 1-2, right? And you can see there's a difference between the targets, but it's no problem because a wave 3 can easily extend to higher prices. Oh. What's up, Alimo? Yeah, answer this during the stream. Cheers, Christian. Yeah, that was live Elliott Wave Analysis on ETH there. View in the analysis, of course. ETH Bitcoin, ETH BTC. I mean, yeah, I don't really go into this. I'm not gonna do an analysis on this. I can have a. I don't even know what chart I need to take, but I won't analyze this because it's not something I do. Apparently I have very old analysis here. Very, very old analysis. This must be like, what, 2021 when I started, but... 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Potential for a finished impulse. The problem, of course, is like I don't know, like Ethereum divided by Bitcoin. So I never analyzed this stuff. I don't even really know what it means if this goes up. Does that mean like Ethereum is more powerful than Bitcoin, goes more up in percentage, right? Is that what it is? But these type of charts, like, I don't know in you know how well you can really analyze this. I never really do this. So we clearly have a three-wave structure to the downside, so that is something, right? 3 overlap, 1, 2, 3, 4, 5. Potential for an expanding structure. 1, 2, 1, 2, 3, 4, 5, 4. We never got a 5, so that has to be a truncation. Preferably you just do 1, 2, 3, 4, 5, done. Retrace. Yeah. This, I don't know. This is not interesting to me. It's not a dollar chart, right? Like, but yeah, you do have a three-wave structure to the downside, so just based on this structure alone, probabilities then from an Elliott Wave point of view would be higher to take out the high still. I don't know what it means, but there you go. Yeah, that's pretty much that. Yeah, I'll get water after the stream. Highest probability. Of course, I just mentioned the probabilities. I never mention exact numbers because people trade the numbers. I'm not a signal service. So if something is highest probability, I will mention highest probability or lower probability, or I always mention where probabilities change at what particular level. Thanks, Patrick. Cheers, Power Meet. How are people getting on with the trades in a diamond? There's been... Got to, of course, see if there's any diamonds. They will be able to answer. Of course, I'm doing very well, but in diamond, not to forget, diamond, besides me having my plan and strategy there, that some people trade, there's also many people that develop their own plans and strategy, which is the goal of diamond. So it's a mix of, it's a mixed club. But with the way I trade and my strat, yeah, can't say doing bad. Yeah, very nice. Thank you for the live ETH analysis. Pleasure, Hiop. Aiden Farmer, didn't expect Bitcoin to rise so quick. Don't shout it off the rooftops just yet, though. We are definitely not in a safe zone for Bitcoin. So we had our bearish CVD divergences. Right, so when we moved up, probabilities were higher for a diagonal. Of course, preferably we had a little bit of a deeper retracement, right? For a wave 2, let me put this on the chart. So for a wave 2, this 0.382 is very rare. That because we didn't even hit the 0.382. And it's very rare for a wave 2 to not even hit the 0.382. It's more common for a wave B or a corrective structure to be very shallow, right? It's just that we haven't really lost any significant support or seen any big downside, but we do have the bearish CVD divergences here, which have played out. So that is something, and we're retesting support. But this is, of course, now that you're here, this is not a long area. I mean, no financial advice, right? We were looking here, remember? You can just read the thumbnails and you literally know what we were looking for. The thumbnail, here I had a thumbnail looking for a move down, right? Here I had the thumbnail, one more push up and then down, right? We got the move down. And we were looking for an ABC or a 1, 2, 3. Now we got a very shallow move down, but the probabilities were higher for a move up. So of course for longs, this is your long area, right? And if not here, then just before you take out the high, because you hit the 886 here, taken from the high to the low. So probabilities are higher to take the high. And if you didn't enter here, then once again here in this range, you again hit an 886 on the 15 minute. Right here, this 886 and then another 886. So even in this range, and then we created bullish CVDs here as well, right? So this was another long entry, right? But now, like, you hit the golden pocket, which is taken from 70K to the low that we have on the chart. We have hit an ABC target on the chart as well, right? The 1-to-1. This is a bearish target area. We are retracing down with bearish CVDs, right? It's very slowly at the moment. It's very, very slow grinding price action. But obviously, from a trading perspective, unless you're a scalper, me, not interested in looking for longs. What I want to see for longs is a change of market structure, moving up higher highs, higher lows, consistently with bull CVDs minimum. Right? As at the moment, I'm not interested. Right? Of course, I'm interested in longing, but not with what I see on the chart now for new positions. No? So yeah, it is more interesting to reject at 65, 66, and even if we do move down, preferably I'm looking for a double zigzag, WXY, where during the weekend, right, if we don't see any big moves during the weekend, I will keep my eyes open for the potential of a bigger three-wave structure down to move down into this pocket, important support resistance around 57K, 57.5, and then look for another zigzag up. And then we'll be counting a W, X, Y, resistance 65, 66, look for a new low. I mean, that's interesting. So preferably on the daily as well, you still look for higher to come. But based on local price action here, no interest to short or too long just yet. I'm also not interested in a short. I'm not in a short. So let that be clear. Because we made a low, we hit important support, probabilities were higher here to move up, and yes, we hit resistance, but I'm not catching knives and all that stuff, right? I need hours before I enter positions. So yeah, just observing. On ETH, of course, it would be nice if you don't hit 2917 to return down and make one more low to create an impulse, 1, 2, 3, 4, 5. Probably though, Bitcoin has to go down as well. If ETH goes up, ETH rises more than Bitcoin. And I mean, generally people use alts to get more Bitcoin, right? I mean, that's the quote unquote like saying like, oh yeah, I trade alts because then I can have more Bitcoin. I bet there's of course people that trade particular projects like, I really support this, or I love this project, so I trade it. But yeah, you can of course trade ETH to then get more Bitcoin. Yeah. Yeah, cheers, Kevin. Yeah. Does it hit the 0.382 on normal chart instead of logarithmic? No, this is actually the normal chart now. So in both cases, it didn't. So here, this is linear, right? And this is log. So in both cases, you can see it didn't touch, which of course is very rare for a wave 2. So I mean, if you take that into account, right? Like, so the thing is, I'm of course I'm not a financial advisor, but I mean it's quite clueless if you go long here, right? Like, even if you count bullish probabilities, you literally hit the target for C. I mean, it's not too great. So the 382 touch at the low, or not touch, right? It's very rare for wave 2. We move up, right? There's definitely something to say for an ABC. But what we want to see to confirm it is break the base channel would be good. Break the trend channel would be good. Hit 57 point, what was it? 7K, 6K would be good. See a significant move down, right? Like, before I just explained, like, so Elliott waves is one, directional bias. From an Elliott wave point of view, we were looking for upside. You can just look at the thumbnails, you'll see the whole story. Now we got the move up. And so here we were, by the way, looking for down. Here we were looking for one more push. We finally got the move towards the downside, and then the probabilities were higher to move up. But now that we got the move up and we hit the C target area, that's why in the morning update I had a big text on my screen, because I can't say very short 1 hour time frame, highest probability bulls, lowest probability bears, because we hit the target for C. We started to range sideways. I said, like, arguably it's still bulls because we haven't lost market structure, didn't lose support, didn't break the trend channel and the base channel. But of course, like, when you are ranging up here just below wave C target area, I mean, it's absolutely clueless if you go long against such an area. So what I want to see, therefore, right? I just explained where the longs were interesting. For me to get interested in new longs, I need to see a grind back up supported by CVD, volume, Elliott wave counts. Else I'm not interested. I'm looking. I'm not interested. So, I was part of the move up, yes, but now here, no, not interested. Tangerine, just job week done. Saw you live. Start watching at the PC while you was doing ETA. Couldn't focus on work and the interesting TA you were doing. Gonna rewatch. At least you got your priorities straight and focused on your work there. As long as the day job feeds you, feeds the family or whatever, then it's priority. Trying to make it as a trader, and once trading starts to take over job salary and stuff, you can try and make some decisions. Thank you for the CVD template. It's not something to be taken for granted. Pleasure, Dasek. Pleasure. Yeah, it's. I wanted to share it. Of course, I want to share as much as I can, and of course as much free as I can. And theoretically, it's absolutely free. People support the channel a bit by registering with the links. It's just you get access and you can use it. And I think honestly, if I look at the CVD template and how good that is, I mean, for me it rivals the like any other indicator you can buy out there. But here I give it for free. If I want to, people want me to put a price on it. I mean, you can't like expect like, it's gonna be there for $5. You know what I mean? Like, it's if you look at because of course I have to do market research for me to check, okay, where does this indicator stand compared to what's out there? Because the CVD, it's so good. Plus, if people don't want to support for free, it's literally free. Okay, people want to pay, that's fine. But I have to do some market analysis and see, because you only get a very small percentage of the fees if people actually trade. If people make an account, put $100 in, get access, and then remove the account, yeah, that's fine, I suppose. But the support is in if people consistently make use of their account, and every time you get a few cents, you know, if people trade, usually most people trade small portfolios. Yeah, you might get a few cents, few euros or dollars, but it's not gonna cut it, you know. So, but it's more the consistency. Like if I can help people to become better and help them to develop a plan, and they support the channel by trading with one of the links, then if I can make them better and they can eventually trade bigger sizes and enjoy trading, of course it then helps me as well, but I can help them develop, and then eventually you get back. It's more the consistency, right? It's just if people register and they enjoy trading, they consistently support, not just a one-time, oh, I pay you and we're done. It's more like consistent. And even though a payment can be one-time high, right? So if people, oh yeah, okay, we're going to put a stamp on it. It's this price, one-time high price, and then zero, right? That's, they got it and done. If people become a partner, the buy is here. And if people become an affiliate, it's very slow, very slow, very slow. But then if they hang around long enough and they enjoy the channel, they enjoy to support, they become better, I can help them to be better with the analysis and hopefully help them in a way, then eventually that support is going to outweigh any single price, you know. I just want to give as much as I can. Hopefully people get better, and yeah, I can see that back in the data with yeah. But if people just want to pay for it, fine, but don't expect $5 for such a thing, you know. Yeah, it's subscription based. I have been I have been thinking about adding a membership level just for the indicator, but then besides the CVD template, you also get access to the lower membership levels, whatever they are going to be. That depends on the membership level price. But then what I can do is, in that case, besides people getting access, they also get access to other membership levels, and there I can give them more value. So then besides just, oh, here's the CVT tool and that's it, I can also give them more value again by having them see the updates, short-term updates, and being active in the gold Elliott Wave section where we talk about Elliott Waves. It's a private group. I help there. I am most active there. I answer questions there. I do private live streams there. So I think it's more interesting to then create a membership level where people have even more value than just the indicator itself. And then, yeah, hopefully they also enjoy the other stuff in the memberships, and they want to hang around. And of course, they can go down or up in membership levels whenever they want. But if they stay a member, it at least supports the channel, you know, small bits and pieces. So, but yeah, I of course, I like so much is free on the channel, and the CVD indicator as well, the template. Saragard, tomorrow is the 160-kilometer marathon. Yo, I'll go in your cap. Yo, I look forward. I'm not, if you want to, but you do a 160K marathon. If you do a Strava or whatever, or you're tracking it, share it in the sports section in Discord. I'd love to see how well you've done. You're already a boss for doing 160 kilometers. So very impressed, but let us know how you're doing and what you're up to. What is the advantage of CVD over RSI? RSI is a lagging indicator. Now, first of all, before I go into the RSI classic bash, RSI is great. You know, it's fine. It's not great. It's fine, but it's lagging, and it doesn't show what happens now in the market, right? The most famous RSI divergence in Elliott Waves is the 3-5 divergence, meaning wave 1, 2, 3, 4, 5. The moment you get a wave 5, you have a divergence on the RSI, right? However, the problem here is that if you have a multi 1-2, you have a multi 4-5, and in a multi 4-5, you can still move up very high. Besides the fact that RSI is a lagging indicator, and why that's important is what I'll explain in a second. But just an FYI, the first time you had bearish divergences on the RSI was at 34K. You can check it. You just go to the 4-hour, 6-hour, go back here. Now price all the way moved up to 70K. If you sold your bag because of bearish CVD bearish RSI divergences are here, and you had bearish RSI here, bearish RSI here, bearish RSI here, just keeps going. And look at where price is now. Like, when are you actually gonna like use it? Like, oh shit, I just missed out on half of the bull market because of my bearish RSI. So you still need a plan with RSI. Of course, you can use RSI, but you still need a very good plan of how to use RSI, no? And it's a momentum indicator. It doesn't show you what is actually happening in the market. And this is the big difference with CVD. CVD shows you exactly what is happening right now in the market on the different time frames. Best used on a 15-minute and a 3-minute, 5-minute, 30-minute lower time frames. And what the CVD shows you is, I can best explain that with my Good to Know channel 1-pager. There you go. So here's shortly the theory. Now, I do have a video on my channel, so look for CVD. It's on the homepage of my channel to learn all about it. But the CVD shows you what is happening in the market now, meaning the market buyers and the market sellers are visible in the CVD line. And if in a particular moment in time, the CVD line moves up in that candle, there's more buyers than sellers in that candle. If CVD moves down, there's more sellers than buyers in that candle. But what you can do with CVD is you can spot absorption. You can spot hidden limit orders of very big positions, right? You want to trade absorption, forget about exhaustion, right? And a bullish CVD is a higher low on price, but a lower low on the CVD. Meaning, so now it's translated in theory, a higher low in price, lower low CVD means there is more selling going on as price is moving down here. More people are selling than they were selling at the low here. However, we are not managing to create a new low. CVD shows there's more people market selling, there's more market sells, right? Compared to the low previously, because we have a lower low, there's more people selling. But on price, we do not see a lower low. We see a higher low, which translates into there's some absorption going on. Someone is absorbing all those market shorts with like bigger limit orders, right? And you want to trade in the direction of course, like the big traders, no? Big meaning very big, right? Generally not necessarily retail. And the probabilities then are higher to move up. The moment you take out this high here, probabilities play out. Same with the bearish. Lower high on price, higher high CVD. There's more people market buying here, right? More people market buying at the lower high than the higher high because CVD is higher. However, we have a lower high. So someone is absorbing all those market buys with a limit sell, right? Big position. And the moment then you move down, take out this low, the target is reached. Now this is, in a short explanation, what CVD is and how it works. And it is so good. I don't know any other indicator that beats CVD in its usability. Like and its use. Of course, it takes a little bit of time to get used to it, just like any other indicator. But yeah, it's so good. I use it for years already. And it's a pleasure. Of course, you see only one green line here, but that's because this is the biggest one. We had bullish CVDs here all the time as price moved up, right? So here we had the first bullish CVD was here at the low. We hit important support. Always use CVD in relation to the context and your waves. We hit support, higher low price, lower low CVD. There's absorption going on while hitting support, increasing probabilities for a move up. We get the move up, right? We wait for a range to form, ta-da-da-da-da. Bearish CVDs got invalidated. Okay, supports the bullish narrative. Some bearish CVDs here did play out. Just as a side note, if you would have traded every 15-minute CVD divergence here that has been made since the low, oh boy, do you have a incredible week. So price here moved down after bearish CVDs playing out. Higher low in price, lower low on both yellow and blue here. Once again, with this low, higher low, bullish CVD played out. Then we have two bearish CVDs playing out, right? As price moves down, we also create new bullish CVDs here. Higher low in price, look at yellow, lower low CVD. Absorption going on, boom, move up, plays out, takes the high. Little bearish CVD didn't play out, but that's only because we didn't take this low. But look how close we got. I mean, of course, trade management point of view, I mean, shouldn't have your stop loss hit here. And then eventually we move back up. Once again, bullish CVD, by the way, higher low here, lower low, move up. And then we finally get a bit of a bigger retracement. We don't get another bullish CVD divergence with this low here and a higher low, right? There was no bull CVD here. We finally get a retracement. Retracement comes, more bullish CVD. Oh well. So yeah, I mean it's so good. It shows you what's happening in the market right now. It's not lagging. And if you would go to the 34K price action, right? RSI was showing bearish CVD divergences all the time. CVD was showing bullish, 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 bullish. It's just also here bullish and here bullish in this range. It's just, yeah. I mean, I don't know why people use RSI, but it's a great tool, I suppose, in the hands of people that really understand and use RSI. I think it is a good tool, right? I know how to use it, but compared to CVD, it's nothing for me. So yeah, CVD is a lot more effective. So that's the big difference for me. CVD is a lot more tradable, a lot more market insight. You see a lot better what happens in the market right now. You can a lot more effectively trade turnarounds of price, right? So, for example, so I don't know what RSI has done here at the low, right? I have no idea what RSI did here, but as shown on CVD, we had bullish CVDs here, right? Also here, we had, first of all, small little bullish CVD here. We also had a bullish CVD here, right? And then we moved towards the downside. I forgot what happened here. Then we had bullish CVDs here, bullish CVDs here, bullish CVDs here, and we get to move up. When you see this, right? Consistent absorption, you just gotta go, right? You gotta make that decision to move with price. And then as price moves up, bullish CVD here, we had bullish CVD here, we had bullish CVD here. I remember because I traded this all the way to the upside, right? We also had bullish CVDs here, right? No. Yeah. And then I explained with this move to the downside, I showed this on stream. Every bounce to the upside here was countered, every single one was countered with bearish CVD divergences. Bearish CVD, bearish CVD, bearish CVD, bearish CVD. There was like no bullish CVD. There was no strength. And there we are, 49K, poof, right? So yeah, I mean, it's such a good tool. So yeah, I don't know. I'm not here to convince anyone, but hey, if you wanna know about something, I literally in Discord, first of all, here in the Good to Know channel, this is the website charts.aggr.trade, right? Here's the template. This is the old template without the lines on the chart, right? So now the lines are visible on the chart. So the divergences are visible, red line bearish, green line bullish, right? So the chart without this, and it's a little bit less coded, right? So it's the old version. is basically this. So you gotta train yourself, and but I think that's still good, and it's just a little bit different. And then so that one is just there. It's literally right here, right? You can download it, you can upload it, you can train yourself, use the template as well. Also check out the video that I made. It's almost 30k people that watched it, most watched video. And then for the newest template, just check out this post here, Koens Updates. It's also completely free, but there's been a lot of work going on into developing the newest template, including the lines, mainly by Mr. Friends in the community, the developer. And just because of all the work that goes in it, plus how much this template is improved incredibly, the only thing we ask is, hey, if you want to support the channel, it's completely free, but use one of the links, put $100 in, and enjoy trading, and I just give you the role, and you're in. And some people say, I don't want to do that, and that's fine. They want to just pay for it, and then I'm like, okay, that's good. I hear you, and I will organize something for you, but I need to do a bit of market analysis and think about how I can do that. But I of course I can also say, hey, we're just going to keep this private. I'm not going to share it. But that's not me. I want you guys to be successful as well. And I use everything you see in all my videos and all my streams, right? It's all there. All the stuff I use in my trading is there. And this is so good. Why do I not want to share it with people and help them to either become profitable or get more profit using what I use as well? But the only small little bug is seeing the word bug. The only bug is sometimes it freezes. 1 second, waiting. Oh, here you see sometimes the cursor is freezing, but that's it. The template, other than that, works absolutely 100%. But we know about this. Mr. Friends, the developer, is currently on holiday. We're not bothering him on holiday, right? So he is gone for a couple of days. So I don't even want him to look at Discord and look at the code and whatnot. Let him have his holiday. Everything completely works fine. It's just that sometimes you might get a freeze, but not everyone. So we don't really know why that is, because not everyone actually gets that, because I've done a poll. So here, so some people don't, some people do. Most people do, but some people don't. Also in Diamond, some people do, some people don't. So in Diamond, the template is always shared, it's always new stuff. But yeah, we don't really. He's gonna figure it out. He says it's not a difficult solution, but he needs to look into it. And it also only happens if the bullish div is turned on. If the bearish divergence is turned on and not the bullish one, I have no problem. So I gave all that feedback to Mr. Friend. So now you can see there's no lag, right? And if I turn it back on, now 1 second, we waiting. Oh, there it is, right? We don't really. I'm a noob, right? I don't know. I'm not a developer. I have no clue. So, but he will know. So yeah. But some people do get it. Some people don't. Yeah. Ooh. Guys, it's 6 p.m. We're online for how long now? 3 hours, yo. Man, I need a dip in the ocean. I'm pretty much an ocean myself by now. Open interest. Open interest is interesting, but I found, based on collecting data myself over many months, that open interest in combination with CVD does not show any significant improvement. So therefore, I don't use open interest. Yeah. CVD check the Koens update. I just showed it in Discord. Go to the Good to Know channel or the Koens update channel in Discord, or go to the community section in YouTube and scroll down 3 posts. Pleasure, Thunderin. Wait, current entry level between bronze. But my friend, it's not going to be a level between bronze and silver, eh? Like a template. Like, look, I'm not. It doesn't make sense to talk about it, but yeah, something like this is not like gonna be like, oh, we're just gonna put it online for $7. You know what I mean? Doesn't make sense. If people want to pay for it, that's fine. But I mean, it's people talk about that green dot, red dot thing from Face. I mean, that one is like hundreds of dollars. Now, don't expect that on my channel. I'm not such a ripoff. But if we talk about efficiency of a template and tradability of a template, it's easily rivaling stuff of that. And it's a lot simpler as well. You know, it's not 4 combined tools and all that stuff. So yeah, there's no way it's going to be below silver. No way it's going to be below gold. So, yeah. Below diamond or above diamond, I'm not sure. But I have to do more research. So it takes time. But hey, it's out there for free if people want to support the channel. For fishing, I do really love fishing. Enjoy, man. And thanks for being here, Thunderin. Actually, the third wave here is longer than your wave 1. Because it hit the one, or it passed the 1-to-1 from the low. And if we take a high here, so we can, of course, if you take this high, then yes. But it depends where your wave 5 would end. No, if your wave 5 ends here, then it is shorter. And if you then put your 3 from there to there to there, right, then yes, right, then your wave 3 is indeed a shorter wave structure. If you take a trend-based fib from the low to the high here and count this as a corrective structure, then it is longer. It's just that in both of the cases, right, ABC, WXY, doesn't really matter because you hit the most common target area for corrective structure, either WXY or ABC. So this is your resistance. Yeah. But it's sharp. It depends on your pool, and it's very well noticed, Paul. Yeah. Wave 4 of wave 3. Wave 4 of wave 3. So then wave 4 of wave 3. 1, 2, 1, 2, 3, 4, 5. Yes, preferably. So in that case, that's correct, right? A, B, one more high in C. In my analysis, so what I would like to look for is at least this high to be taken one more time, as explained this morning as well. We have a naked point of control there. We don't want price to move to 60, no, what was it? 57.6. There would be an invalidation. But we do have a daily naked point of control just above. And in that case, yeah, I mean, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. One more high. So I agree. I fully agree. Absolutely correct. That is absolutely a scenario to keep in mind. 1, 2, 1, 2, 1, 2. No. 1, 2. Man, I need to put this on the... Don't do up. Keep it simple. I'm so fried. I'm mega fried, yo. 1, 2, 3, 4, 5. Of course, in this case, though, if you take it from the lowest pivot to the highest pivot, you don't want to hit 58.9, but I want to be more safe, 57.6. 1, 2, 1, 2, 3, yeah. So yeah, I mean, it would lead to one more high, which is nice. So yeah, that's definitely a scenario to think of. Of course, in the videos, I did not show the sub-degree counts, right? I just have wave C. Oops, I just have this as the wave C target area, and both wave C or Y, same target area here. So yeah, we have hit the 1-to-1. We still have a daily naked point of control just above. Currently quite a slow grind down. yeah, definitely interesting to look for that high. Sam. Yo, Sam, cheers, man. Enjoy your run, first of all, and second, maybe soon. Welcome to gold after your run, maybe. But deeply impressed by educative skills and spirit. Pleasure, Sam. Appreciate it, man. Thanks for your support. Means a lot. One of the few that I spoke to on LinkedIn out of all platforms. Cheers, Sam. CVD low means taking advantage of many people getting bearish and filling up large orders. Yes, if you have a higher low in price. A higher low and lower low is not a thing, right? It is people call it hidden divergences and other things, but with CVD it's the way it is, right? So you have if price creates a higher low on price but a lower low on CVD, that's bullish. If price creates a my Control Z, I need to refresh the chart. If price creates a lower high but a higher high on the CVD, that's bearish. So it's higher low, lower low, right? Higher low price, lower low CVD, lower high price, higher high CVD. That's the divergence. So yeah, absorption is much better. Yeah. Rodney, it is in Discord, in the Good to Know channel, right? In the Good to Know channel in Discord. So that is where you can find also the older version is here and the newer version is here. And in I also wrote a post in Telegram, if you scroll up, and in the YouTube community section. I get the freeze on yeah, I'm also using Google Chrome, yeah. Bearish, not at the moment. There's no significant signs that at the moment that really go against it. But in the analysis, I spoke about what to look out for. You trade absorption, not exhaustion. Yeah, correct. I answered that one. Good job. Thank you. But thank Mr. Friends. Mr. Friends he's the guy. He's the hero, not me. Yeah. I guess with Mr. Friends, we should check it out. I can always do a poll and see what people use. I agree, Sam. Yeah. I don't get the freeze on Chrome. Okay. I do. Yeah. Yeah. That's also nice, T. Clepson. Yeah, you know, like you want to have your stuff. Like it's just nice to have like these coded stuff, different than the norm. Carl Leondis, first time, of course, not your first message here, but first time after watching many analysts that I feel that I'm in safe hands with a balanced analyzer like you. Thank you. It is my absolute pleasure. But yeah, welcome to the channel, Carl. Appreciate you checking it out and checking out the stream, being here and enjoying the analysis. Got to take care of the kids. Wow. Lambo T. Clepson. I just explained the how to. I really love the lives. It's a pleasure. Do you use log only on the higher time frames when I need to analyze price pumping hundreds of percent? Like I need at least a few 100% difference, or minimum would be 100 before I would switch to log. That the weekend will be sideways. Most commonly, I mean, based on probabilities, if you would track price action every weekend and you just keep track of statistics, volatile or sideways, by far most common is sideways for the weekend. Bitcoin will pump or dump. It's all probabilities. We are currently at support. We haven't yet broken the base channel, trend channel, haven't touched 57.6K, right? So we do have some bearish CVD divergences that already played out, but yeah, I'll be waiting for a range to form. Not yet like, oh, higher probabilities for the bears just yet. But yeah, we observe the range. And this is a probabilities question. Don't you have the feeling that the more this elegance unveiling knowledge, the more you get dragged into a whirlpool? It is addictive. I mean, it is. Look, the thing is, once you start with Elliott waves and you get the basic of 5 waves up or down and 3 waves corrections, you cannot look at a chart without counting anymore. So it's always going to be in your brain like 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. Like you can't. So it's very addictive. The moment you get this, like the moment you start to understand Elliott waves at the very beginning, 5 waves up, 3 waves down, it's over. You're in. Yeah. When I use log, it hasn't reached certain levels, but when I don't use log, it's broken. Interesting. Yeah, for me, on the lower time frames, I use linear, and on the high time frames, I use log, and always works very, very well. And pleasure, Henrik. Pleasure. Bearish CVD on the 1 hour, that is correct. Be mindful that the CVD already played out pretty much. So this CVD, 1 second, this one here, right? So lower high on price, high, that's not interesting. So we wanted, this one played out. So we are most interested in the more local, newer CVDs. And we have a little bullish CVD here, right? Countered by a bearish one. So normally get a bit of a move down. So yeah, I'm not really involved with local price action at the moment. But if we touch the 886, which high are we gonna take? So if we touch the 886, probabilities are high. You're gonna take out the low. So yeah, for now, we have a bit of bullish, bit of bearish. Give it some time. I like CVD on the 15 though, but not much going on really. So okay, everyone, it's been an incredible long live stream and a very long analysis. We have covered both Bitcoin and Ethereum. We did a full new live analysis on the Ethereum chart. I am sweating like crazy, like it's been a workout, I swear. I lose as much water as the Formula 1 drivers. Oh, that's not true. But thanks for being here. Thanks for watching. Thanks for participating, interacting, and all the good stuff. Thanks for chatting. Thanks for enjoying Elliott Waves. Thanks for 13,000 subscribers on this channel. Like, it's absolutely nuts. It's nuts. Every day the numbers increase, and I don't know. It started as just making some videos and having a bit of a goal and a plan, but 1 year and a little bit later, here we are. So so what the hell? The voice of pi. Make sure to fill in the. Wait. Fill in the form. So instead of the email, we actually got a form now, which makes it easier. By the way, oh wait, this is the Discord link. 1 second, I'm coming. I'm gonna copy. Watch out with borrowing, eh? But everyone, thanks for being here. 3 hours and 20 minutes later, I'm absolutely wasted. Gonna have some food. I don't know about an update tonight. I want to spend some time with the wife. Want to go to the ocean, have a swim, and do some stuff in the apartment here. So, but tomorrow morning is gonna be an update for sure. Just not so sure about tonight. Of course, dinner. Ocean, swim for a bit, watching an episode with the wife, chill a bit, and probably just by doing these 3 things, it's probably going to be 10 p.m. already. So, the voice of pi. of course, the CVD will be coming out just like probably like either paying or a membership instead of the people that can't make it fully free. I appreciate the effort though. Send me a DM, Voice of Pi. Just send me a DM, and I can keep you informed as well with what's going to happen, as some people want to buy instead of just register with links. Oh, I get it. Oh, by the way, I asked the Oracle earlier today, is price going up or down? And because Hoshi asked it under one of the YouTube videos in the comments, and my wife said, she listens very well. She said, follow your plan. And with that, I wish you a very good Friday, and for Asia and Oceania, a very good Saturday. Have a good weekend. Maybe an update tonight, probably not, but tomorrow morning will be another update. I'll see you then.